All right. I'm going to start getting ready now. This is one of my favorite days of the week, Sunday. This is where we get to practice, prepare mentally, emotionally for the stock market. This is where the real money is really made, is in the investigation and trying to understand what and why things are moving in the market, why the market is moving in a particular way, right? And in doing so, it's been shown to be profitable these past couple of weeks. These past couple of weeks have shown that people are gravitating towards understanding how the market actually moves. I'll just, want to start off. I have started recording because I typically record these sessions and put them on YouTube. My YouTube page, you type in L. Jermaine Russell, you'll see it. It's Stocks and Squats. So you can always backtrack, from previous weeks where we've done recordings and actually went through the nitty gritty of certain stocks, because the biggest thing that happened with the stock market is that things repeat all the time. It's just trying to understand where you need to get in when this repetitive pattern happens. Is the stock market is a living, breathing organism, so that it gives us an opportunity to live and breathe with it, and hopefully that finds it being profitable. So this upcoming week, once again, I want to say thank you so much for taking your time out this Sunday evening. We will get into analysis of stocks for this upcoming week, particularly the earnings, looking at stocks from the earnings, and then we'll use the chart analysis to be able to identify, which stocks actually from those earnings, which ones will be the more profitable ones. And then also, I know I haven't done it in the previous weeks, but I want to bring it forward to this week where we go over some trading rules, some of the rules that I've created, and every trader or even investor has their own rule. So knowing what your rules are and writing them down gives you a better chance of being consistently profitable versus trying to figure out what you're going to do once you place a trade. You want to have a game plan prior to putting your hard-earned money into the stock market. So with that being said, I want to go on to, we're not chasing money. We're chasing the process. And this process will refine you, not just in the stock market, but also in life. You will start to really think about the ways that you move forward, the things that you want to do that gives you some type of success. That you have profitable, successful patterns now, right? So we want to refine that process that you already have now and make it better, right? So we're not chasing the money. We're going to see stocks run $10, $20 a share in a day, right? It's not chasing that $10 because at the top, that's right now you're putting yourself at a disadvantage. So we want to make sure that we want to make sure that we are chasing the actual process. And how do we do that with this process? We do that by, trying to figure out how does the actual stock market move? And this is why you're here, right? This is why we're all here. This is why we come to learn. And part of that process is using the OODA loop. And OODA, I know I mentioned it last week. I always mention the same things over and over and over again, because that's what you're going to realize, that the market is repetitive. And in understanding how repetitive it is, we have to implement some type of idea on how we can go into the flow of the market. So the OODA loop is, observe, orient, decide, and act. We observe what's going on, right? Hearing all this external information and trying to take those external information and make some type of sense of it, right? Sometimes that external information could be whatever is happening in politics, right? Or if there's some type of impending war that might be happening, or if there's some type of supply demand that might be happening in another industry that can affect the entire market, right? So we want to observe what's going on. And then after that, we want to start analyzing and synthesizing that external information and making it something something that we can, oh, I didn't know that people were waiting. I'm sorry. Sorry about that. So sorry about that. I didn't know that there was people waiting. My bad. Um, but we want to take that information. We want to orient ourselves from that external information. We want to orient ourselves and say, okay, now that we have this information, what happened before in the past? We want to know this previous experience, this previous information that maybe we're recountering a new cycle, but it's very similar to what happened in the past. And how can we use the new information from this, that external source, the whatever impending war, supply glut that might be happening, and how can we make that new information very adaptable or flexible to imply or apply in this current time. And then in applying this information, now we have to come up with some type of hypothesis, where this is where you are a scientist now. This is where, if you never liked science when you were in undergrad, if you were in middle school, high school, whatever, this is your time and chance where you are now a scientist to your own ideas and your own hypothesis. And you want to backtrack and test these ideas and hypotheses always so often, because the market can change. Everything I can tell you up until this point could have been great and worked for the past 9, 10, 12 weeks. And then tomorrow, the whole market change. And then we have to adapt, right? Because that's the only way as humans we survive, is by adapting, or we perish, right? And then after we make this hypothesis, then we start to act on it and try to see what the, given feedback, like what is the percentage rate? When I tend to put in a stock that is overvalued at like $200 a share, how often do I win off of that type of stock versus a stock that's not overbought, which we'll get into, and is oversold and it has some upside? Like, how often do I win off of these percentages? So we'll start to analyze those things, and actually, do a simulated run, because I don't know what's been happening with the Thinkorswim platform for the past couple of weekends. It's been lagging. During the week, it's been great, during the actual trading day, but using the on-demand function where you can really test your trades on historically, like when stocks have moved in the past, you can test, how you would approach a stock in the present by using your plan, is very, very, very good. It's an optimal way of increasing our chances in being profitable in the market. That's why I love Thinkorswim so much. But in order to even identify these profitable trades, we have to be able to see what type of sequence does it actually run, right? How does it move particularly? And all stocks move in this certain direction, where it will come from its bottom, create a high, then pull back for a low, then create higher highs and higher lows on the way up until it consolidates. This pattern, you will see this consistently, right? And then once it consolidates, meaning that it can no longer make a higher high, it's tested the previous resistance and now it's finding some resistance, pulling back, then you'll see, lows, lower lows, higher lows happening all the way down until it bottoms out. So how do we know from this period, if we were looking for stocks that are going up, like, you're looking at this pattern that's showing a stock that would potentially go down according to the phases of the Wychoff method, which is true. So identifying when they're coming off their lows is just very, very as much important, because we're going to see a lot of stocks now that are overvalued. That's why the technology sector is coming down. A lot of stocks are overvalued right now. So what you're seeing this, where stocks have ran up and they're consolidating, and everybody's here hoping that it can break back up, but it's not going to do that. It's not breaking back up. What it's doing is starting to crumble down. And then when it crumbles down, then everybody's like, oh man, they're holding the bag now, right? And this is where I am not a big fan of it, right? If you're down 2% in your position and it doesn't look like it wants to break, break previous resistance on the upside, there's nothing wrong with cutting your loss. Taking a 2% loss versus having a 20% loss, I will guarantee you will save you in the long run. We'll get into rules later on, but I just wanted to harp on that point because I feel like a lot of people are just holding just to hold. Um, and then you, like I said, once you're looking for stocks to go back on the upside, right? They made their lower high or lower lows and higher lows. They started to consolidate. So now they're consolidating on the downside, right? And as they consolidate on the downside, now they're looking for some type of upside to break previous resistance, right? So we'll want to find and identify support. That way, when we identify support from these stocks that already ran up and they can't go up anymore and they start pulling back, we said, okay, just give it some time to find some support before you re-enter. And then you can use other indicators that I will show you in order for you to identify, well, is support being held right now, or does it still have more downside and I should still wait, right? Or should I get in now and really test what's going on? Maybe it does have some upside, and but trying to catch a falling knife, I do not recommend at all. That's probably the worst thing that you could try to do is trying to time the bottom. Don't try to time the bottom. Just let the market, let the charts tell you. You don't tell it. So, earnings. Earnings coming up this week. We have quite a lot. And it has been like this the past couple of weeks. What we've been doing for the so far is that we'll take a couple of stocks from, for Monday, probably one or two, and analyze it and see if their earnings will do pretty well, right? And then we'll choose another stock somewhere else in the week. Um, I'm really interested in AMC, obviously, because that's the one that's been running. So I want to know how that one pretty much goes. Uh, I'm also looking at Sonos. Sonos was one of my favorites when it was at $20, and I got out too soon. I think it's pretty close to like $40 now a share. So they've been doing pretty well. Celsius, this is an energy drink. This energy drink has been, and yet, once you become familiar with certain stocks in the market, there's going to be a point where you're not going to need me, and you know what you want to do with the stocks, right? You're going to know these companies off the top of your head. You're going to be like, you know what? I know their ticker symbol. I don't know all these ticker symbols like off the top, but the platform that I trade with, luckily you can save it, and then you don't always have to know the ticker symbol. You can probably just remember like a letter and then it'll pop up for you. But that's going on. I like Stitch Fix. Stitch Fix is one I think that we should probably analyze because I could see them probably doing something pretty good, particularly if now that things are going to start reopening and people are going into their offices, they still, going to need some tailoring and stuff like that. So I see that Stitch Fix is definitely up there when it comes to, at least being in a big marketplace. Tattoo Chef, that's TTCF. I even wrote an article about them. I like what they're doing with their, I guess, green foods. They're trying to, make everything plant based, where you can just go into a freezer aisle and get your plant based food. Even though I feel like it still has the same amount of sodium in it as if you were just getting regular ass food, but at least they're trying. So I do want to see what they do. Good RX also, just because there's a lot of vaccines going out, so I don't know what other people are going to be affected with when it comes to getting their actual drugs. But Good RX on Thursday after the close might be something really good to look at. Um, so yeah, I think that's pretty much like earnings. This is what you're going to look for. Maybe each, if you don't have a Twitter account, I think you should create one. Um, that's going to be very, very important for you, because what happens is that what you do is you go to Twitter to find out social sentiment. You'll hear conversation later that talks about social sentiment, and Reddit is obviously one place that people go to. I know the Lion is another place. um, I know there's stock twits that people go to, but a lot of times on stock twits people just say, oh, it's going to the moon, going to the moon, going to the moon, with no real like theory, hypothesis, or anything that they can expand upon. So um, So I'm not a big fan of them, but when it comes to Twitter, I know that people on the trading floor actually use Twitter. So, you know, when you're like at the NASDAQ or, you know, at the, you know, NYSE, the New York Stock Exchange, you know, you'll see people on the actual floor using Twitter, which is pretty cool at the same time, which Twitter is a company, if you haven't invested in it, I think my frat brother's cousin was in it a couple weeks ago. So they should, you know, they produce positive earnings. So they should continue to go higher. But yeah, I think that is earnings. We're going to come back to earnings, but I just want you to see this one more time with the Wychoff, um, how it looks, right, on the upside and then coming down. Just get familiar with that because you're going to end up seeing this a lot, right? Um, so let's exit out of that. And does anybody have any questions so far? Any questions? All right, go to the chart. Hopefully, because we put up the chart so you can see the chart. Um, so we said we were going to go to earnings. Actually, no. Let's orient you first with the chart actually, and then we can go into the rules afterwards. Um, let's let's first. What do we say? Stitch fix. Oh, Stitch fix. Your STFIX. That's right. Okay. Stitch fix. This was has been a good stock. As you can tell, it did a nice little run up after their last earnings. So what we're going to do is, like I said, we're going to orient ourselves to this chart. What happens on this chart? This is a Thinkorswim platform. And on this platform, what I have on the left-hand side is a watch list of stocks that I've traded so far this month. Either I've held them coming into from February, and I held them in March, or I'm holding them now. Which the ones that I'm holding are highlighted. The ones that, you know, these are the ones that I'm holding currently, and so we will go into those. And then on the other watch list, I have stocks that are above the 200 SMA, which is like the simple moving average is probably the best indicator that you're going to be able to figure out if a stock is on the downside of that Wychoff phase or on the upside of the Wychoff phase. And the 200 moving average is here in this red um, line here. This red line is what I consider the 200 simple moving average, or labeled it as a simple 200 moving average. And it just takes the price over the past 200 days, right? It has a nice average to that. The green line, this green moving average line, is called the 5 exponential moving average. And with this 5, anytime when the stock trades above it, like meaning that it trades and close above the 5 exponential moving average on the day, because we have different time frames. So this is the daily chart. Each candlestick represents one day. Anytime when the stock trades above that exponential 5-day exponential moving average, it goes higher all the time. Anytime it trades below it, what it does is going to go towards the 20 simple moving average price. So the 20 simple moving average price is just like it says, moving average over the past 20 days, right? So each of these moving averages give you a price, and that price is listed on the y-axis here when I highlight on it. So I highlight on the teal line, it gives us 78.19 as the price for the past 20 simple moving average days. Highlight the green, gives us 73.42 as the 5 exponential moving average price, right? So like I said, once the price starts to close below the 5 exponential moving average, and it wants to test the 20 simple moving average. Once it does that, it will start to maybe cross below it. And as it tries to cross below it, let me make sure nobody waiting again. Okay, good. There you go. So once it starts to cross below simple average, it will try to test the 20 or the 200 simple moving average. If it doesn't go any lower, like once it's like, okay, the price is crossed below the 5 EMA and the 20 SMA. Once it starts doing that and it starts finding some type of support, then it wants to see if it can hold support. So it's going to try to retest the 5 exponential moving average. Sometimes it doesn't do that. And the only way that you're going to know if it's not going to be able to go back above the 20 simple moving average is if you add your MACD. So your MACD is your it's a momentum indicator. So when you have your MACD and it crosses, meaning that your teal line is above this yellow line, and whatever trading platform you use, they already have delegated colors for each movement. So right, they will probably your trading platform might say that this might be red and this might be blue, right? Just depending on your trading platform, the colors, are just a representation of the direction. So, getting familiar with, what your MACD colors are is important, because once it crosses, it shows that the momentum is starting to move up. Meaning when it crosses here, it's above the 0 line, which the 0 line shows us that it's in the bullish side of the chart, right? If it was below the 0 line, that would be the bearish side, meaning that the price point would be going down. So it's not below that back here. Back here meaning back in December. So once we see that momentum moving, and then we see that, hey, the momentum is starting to die down, we see that it crossed here. This cross usually means that it's coming to be bearish. If we look at the price point with the moving averages, yeah, it was starting to come down because it was trading below the 5 EMA, but it also held support here, right? So how will we know that this support is going to be held? We will have to also use the RSI. The RSI is the relative strength indicator. So that relative strength indicator lets us know if a stock is overbought, which is indicated here in the red. Once it goes over this line, which is typically 70, you will hear that, if you listen to any analyst that might be on Bloomberg News or CNBC, and they talk about the relative strength index, this is what they're talking about with the numbers: 30, which is, oversold, and 70, which is overbought, which most stocks have been in overbought mode for the past couple of weeks. That's why we had that pullback with the treasury bonds and stuff like that. Just, little things had to pull back the market. So it's not surprising. So that's how we were able to find that there was going to be some support here, because the relative strength said that there was going to be support and you should wait. You should wait. How else would we have known that there was going to be relative support there? We would use the TTM Squeeze, right? And this is another supplemental indicator that help us guide us towards profitability and not trying to catch a falling knife. Because even though what happens is that you have the same 0 line here, right? That we had when we were, analyzing the MACD. But with this 0 line with the TTM Squeeze, you see that the 0 line will change colors. So we will see that there's some red here and then there's some green here. When it starts to turn from red to green, that means that there's some consolidating more on the buying side, right? And then once you start having histograms that are created, that's created above the 0 line, and the 0 line still remains green, that also indicates that there's still upside buying, right? We're analyzing the past, because analyzing the past is very important when you're trying to think about entering any stock that has positive earnings. Just want to make sure that I'm clear on that. So when we look at it, we see that we're overbought, even though there was a lot of buying going on. We saw that, hey, these histograms are getting higher and higher, and then it finally reaches a peak, and it changes colors. It becomes this darker blue. This darker blue still means that there's buying, but there's also some of the depression of that buying. So it's still showing that there's some strength in holding that support area, but it's eventually going to have to come to the zero line. That's just what it's going to have to do. When it finally comes to the zero line still remains green. It didn't change red. If it changed red, then there might have been more downside. Excuse me. But now it maintains this green zero line, and the histogram did turn red, but it was still green. When it's red coming down, that means there's usually some selling going on, but there was also some buying because they wanted to hold some support. So this is why having the TTM squeeze is actually beneficial, because now you see that the next histogram becomes yellow, and it becomes a smaller yellow on the next day. And then if you continue keeping, your eyes on the other other indicators to help guide you onto when to buy, you will see that the support was held. Once the histogram started turning yellow and the zero line is still green, you also that shows that that's a buying signal. And then it also shows you that there was a cross on the moving average. I mean, not on the moving, on the MACD. So if there's a cross on the MACD and then a cross that happened on the moving average, this means that there's some, upside buying that should be happening here because it's going to go higher. Also, and if you have not been taking notes, I think you should really start taking notes, because this is not a game. People really try to come in thinking that they're going to gamble. They're just going to throw some money at something. And then, I will show you a stock that has exponential upside. And then it's up to you to decide if you want to sell or not. I'm not going to tell you to hold on to a stock forever and ever. But when a stock does become overbought, you need to be able to identify when that you want to sell. Like, it was overbought here. Would I have held all the way through here? No. But this is probably the very first note that you need to add in if you haven't written notes yet, is that you want to find a stock that has a strong green candlestick. So if it closes the day, and it gives you a strong, I think I zoomed in pretty bad. Oh, sorry, here it is. So if it closes the day, and it gives you a strong green candlestick like this, you should look at this stock very closely, because that strong green candlestick, meaning that it gave you more than 5% on the day. Write these down. More than 5% of the day. The trading volume is higher than its average trading volume, and the indicators are supporting the movement. Then you should probably start thinking either the next day, if you didn't get in before the market closed on this day, either getting in the next day or the next day. Because on a stock like this, anytime you see this bullish engulfing pattern here, I'm not going to say 100% of the time it's going to go up, but it increases your odds that the price will go up. It does the same thing on the way down. If you get a bearish, and this is a good example here, right? You have your red candlestick, and then you have your green candlestick, then you have your red candlestick, right? This is a bearish engulfing candlestick pattern, meaning that it has a day where it can come down, and sometimes it will come down more, more than it did on its volume, but it didn't do that, right? Because there was still support there because of all the buying. But let's say that you didn't get in back here because you're like, I'm not sure about these earnings. Jermaine got on here talking about these earnings are going to be good, and I don't know. And then you're just like, oh, okay, well, I guess he was right, and I missed it. There's always going to be another opportunity, because the earnings is the indication of knowing what to buy. The technical is what I'm showing you. It's just teaching you where to buy, so you can minimize your downside risk, right? So let's say you get in this strong green candlestick. Now it gives you an opportunity to really hold on to this bullish engulfing pattern, so that you increases your chances to get more upside. Where you would have sold, knowing me, when the minute it goes, overbought, I'm looking to sell. Like I would have been in here and, looking at the MACD, seeing it cross, seeing all this open opportunity for the momentum to go up higher on the day. I'm seeing, 2 days we have a red candlestick. I probably would have shipped my bricks, right? But like I said before, if it's trading above the 5 EMA, that 5 exponential moving price, the stock will go higher, right? So this is something that you don't have to really worry about. Now, if you have been consistently been writing down something that I've been sharing with you thus far, take this down as well. When a stock makes a new high, it's going to come back. Anytime a stock makes an all-time high, and like as you can tell, it just kept on going higher and higher and higher, right? All the way through these multiple days, which is going higher. The power of the bullish engulfing candlestick definitely facilitates that. But once it taps out, especially when it's at a psychological barrier like $100 or $50, maybe even $20, like these little psychological barriers that like has a zero at the end, that's psychological barrier. People are looking to sell. Uh, this went up higher. I would have probably sold when it was at 100, maybe 105, because I'm like, oh, okay, that's the most risk, because I know it continues to make higher highs. It has to come back down. So because it has to come back down, we see now that we are dealing with what it did before. As I move the price to its current trading day, um, this was Friday. Strong, not a strong green candlestick, but a candlestick nonetheless to show that it wants to hold support. Now, these lines that I have in here, these are lines that I typically draw for to identify support and resistance. So these lines I've had in when I was already in Stitch Fix from before, when it was like at $30. So like, let me remove some, and I'm just going to move some so we can identify more of our support and our demand. So we have this support price that was right around here, around this $70 area. And we're saying that because we're seeing this price being held here. We've seen a couple of red days being held here. We see that the MACD is trading below it's starting to trade below the zero line, but we're seeing that the price wants to hold support. Okay, so we'll say right now, support price 70 cents, $70. I like to do these like kind of wide, not too wide, but price range. I want to know what the range that it can go on, because this stock is not a typical low float. It has a wider float, so the price range could go, $5 to $10 in its movement, just because of the earnings, just the possibility of the earnings, and it typically kind of does that on a regular day anyway, just because of its float. Like it was, before after it made its all-time high, it was at $91 as its low and $108 as its high. So, an $18 move, in price is pretty big, right? So we know that it can make some type of wide movement. So we have to keep that part in mind as we're thinking about what price we want to get into. So I said that the price could be, the price resistance should be like this $82 area, because when it hit resistance here, meaning that this green candlestick came up here to this next day, hit a little bit of resistance, next day more resistance, the price pulled back to this support price. So we're seeing this little channel happening here, right? We're seeing this little channel. And then maybe I'll put up another line, resistance line, and I'll put it at its all-time high price, because I know, that's the next resistance. That's really the resistance I want. I want to test that upside. I want to retest the previous resistance. If we can test that previous resistance, then we're in a better, we can get into a great position in the low 70s and then ride the wave on up. So Stitch Fix thus far. Does anyone have any questions? I know I mentioned I haven't gone into like, will it go up or go down? But I know I said a whole mouthful thus far. Does anybody have anything to say?
I just came on, so I didn't know what he was talking about.
Yeah, Fitz, I thank you for arriving. I'm always grateful for you on here too, because you can check me as well and be like, look, what's going on? That's probably not the best uh, idea. So, you know, so as we're looking at Stitch Fix and I seeing, I kind of zoomed out so we can zoom back in.
Hmm.
We're seeing this support here. We're seeing there's upper resistance here around $80, 82, $83 or so. And then once again over here, higher resistance as near its all-time high. So
Yeah, I want as you're talking, I remember a question I wanted to ask you.
yes.
How is the volatility thing working?
Oh, beautifully. I love it.
Okay,
I love it. I love it. I
all
love
right.
it. I know we didn't excuse me. I did not talk about that yet because I was already overloading them with the other technicals,
Mm-hmm.
which I think are like just kind of like fundamental baseline.
Mm-hmm.
Um, but where that is going to be the next thing that we'll talk about is the
Okay, no
volatility.
problem. I just wanted to know.
Yes, sir.
All right.
So the volatility here, if we're looking to get in on this stock, we're seeing that hey, okay, it's holding support. The price didn't close above the 5 EMA yet because the 5 EMA price, like I said, on the y-axis is 73.42. It closed just above that at $73, and we see our $73 sign right here. So we know what the price is. So we start looking at the MACD. We see that it's coming below the zero line, and that's typically a bearish sign, right? But we do see that this teal line looking to curl up, and it might curl up and cross over this tannish line. So, and then that would suggest a change of momentum. Said, okay, we have it on notice. Then we go to the RSI. We see that the RSI, the relative strength, is starting to curl up, right? It found some type of support, right? Because we look from the previous time it found support, it found it around that same 40%. Remember, I said that, the RSI, it could be either go oversold at 30 or overbought at 70. It's right above 40. So it's finding that it's not oversold and that price might be holding a little bit over there. So, okay, it might show some type of significance on being bullish, maybe. TTM squeeze, zero line, starting to get some green dots here, and we're having this yellow histogram is starting to it went from red to yellow. Now I just want you to just take in key points that before it was doing that right, where it was showing that the zero line is still green, but there's the yellow histograms. Even though they're getting smaller, it's taking some time for it to get smaller, and this might even been a fake out, right? Because we're thinking that, oh, this is going to go down because it's red and it's yellow, no longer green. But if we look at even the candlesticks, they actually went up on that day before pulling back down. And still, we have this green zero line, right? So now we're saying, okay, well, it held this green zero line before and to show that it was positive. We got a little fake out here. I need something else that will help me understand why it's doing that. This is why we have the volatility here. The volatility, anytime when the historical purple line is lower than the implied volatility, which is the teal line, that typically means it needs to pull back. The price will have to come back at some point or another. This volatility is way too high. If I were to buy this now, I would be putting myself at a detriment on my
Yeah.
options contract.
If you buy an option right there, you're gonna lose.
You will lose money. Maybe
Yeah.
you'll gain money on the share price. But if
Yeah.
you are trying to buy options and you're looking at this volatility sign, you're like, oh well, but the stock is showing that it has some upside. Don't do it to yourself.
No, lost cause.
There's a lost cause. So we can go further, right? And I tend to do this on any stock that I want to enter in on. I go from the daily to the hour to the minute. And then I go back from that minute to the hour to the day. Most
Mm,
times I'll use the 2 minute 5 day chart because on the minute chart it doesn't show that you can go back that far, right? So it doesn't show more than 5 days. So I'll use a 2 days. I mean 2 minute 5 day chart to show more of the chart so I can really get closer on what is support and resistance. Um, so I'll go extend to the hour chart and I look and I say, okay, still using the same moving averages, same, same moving averages. And remember what I said, anytime the stock trades above the 200 SMA, it's going and it trades above, well, first off, if it trades above the 200 simple moving average, that is a bullish indicator. Bullish indicator. If you get these crosses that happen at all three moving averages, this is something you should write down. If you see these moving averages cross ever, this is going up. If you ever see these moving averages crosses, if you see the 5 EMA, the 20 SMA, and the 200 SMA, that is going up. That is probably one of the best scans that I use. When I scan for stocks, that is exactly where I go to. My study says moving average crossover. The 5 period exponential moving average crosses over to 200. I say the 200 because it is now in bullish territory. And I want the stock to always trade over the 5. Because if it's trading over the 5, that means it has more upside. So I'll do that scan and then I'll get what I want. That's how EYES came up on my chart. And I was telling people about it at like 10:30 in the morning that, hey, I saw it at $3. I was doing a stupid ass inspection. So I couldn't get into this chart. If I wasn't inspecting someone's kitchen because they were afraid of their COVID levels, I would have been up like $10 a share on this. But I'm not even going, I'm frustrated about that, as you can clearly tell. But let's
feel
go back to
pain.
the chart. So now that you know how to scan, right? Now that we're looking at the scanning and knowing that this 5 exponential moving average over the 200 is clearly important, we come to the hour chart of Stitch Fix and we see that, okay, we see that, all the moving averages cross. So that's why we see some upside. Made its new high, trading below the 200 SMA. So now that we know it's trading below the 200 SMA, we know that, hey, it's been bearish for some time. So let's change the style of this so we can just go back so that we can just, where are you? So that we know what we're seeing. So I'm gonna move this to a line chart. I'm gonna zoom in a bit and let's go back to here so you can see what I'm referring to. Can everyone see this?
Yeah.
We see how it looks like on the line on the Wychoff method, right? We see we see that how the lines look, very very important. Um, Try to move that out. So now let me share the chart again. I'll put the lines in. Hopefully you can see that. See that how the same way in the Wyckoff method, how once it made its high and it came down, it just traded, along this 200 SMA price, right? Once it's trading below the 200 SMA, it's always going to get rejected. It wants to get rejected. The only time that it doesn't get rejected is you're probably saying it in your head, but you just don't want to say it out loud because you don't want to feel foolish for saying anything out loud. But the only time that this price starts trading above the 200 SMA is when the moving averages cross again. Once those moving averages start to cross, we already see the cross on the hour chart for the MACD, and we see that it bounced off of its low on the RSI, right? Um, it's not overbought. We see that also in the TTM squeeze that it's entering into some very bullish momentum still. The implied volatility is still too high. right? So I still would not be tempted to buy right now, right? The implied volatility is still higher than historical, and in a book, it said that that is the number one, like one of four common mistakes, and that was number one that happened in option trading. So I said, okay, let's look at the 2 minute chart, right? I typically would go to the minute chart if it was in the in the stock day, but I would still go to the 5 day chart where I can see, what happened in the past 5 days. We're still seeing now that it's trading, still trading right above support, right? Even though it made its low below the 200 SMA. So now it's trading above the 200 SMA. The implied volatility is still pretty high. It's coming back from being overbought, right? So it's coming out with earnings in the pre-market, right? I think, or is it after hours? I think it was, yeah, after hours. So because it's coming out with earnings in the after hours, I, you know, I will always suggest not buying during the day and just wait for the earnings to come out. Because I feel like during the actual pre-market time, which pre-market is, from 4 a.m. until 9:30 a.m. The market opens up at 9:30, closes at 4 p.m., and then you have after hours from 4 p.m. to 8 p.m. So I feel like during the pre-market time, that 4 a.m. to 9:30 a.m. time, that this will eventually pull back to the 200 SMA price, which is around 67, 67.95, I should say. If it starts trading below the 200 SMA price at any given time, you definitely don't want to buy it. I wouldn't buy it before earnings at all. But I feel that during, hype up prior to earnings, and I usually say this, if it's before earnings, it's usually a run up before earnings. I don't believe it's going to happen with this one because it already showed us on the long term chart that it still had some selling to do, right? If that makes sense. So we come to this 2 minute 5 day chart and we see, okay, well, it didn't come up to resistance yet, which is around $82. It hasn't come up to any type of resistance. And it was overbought. After it's being overbought and it's retesting, maybe it will pull back. Maybe it might come back. And this is where I need to come back to the candlesticks because it's harder for me to read just the line chart. But I put the line chart so you can see it in comparison to the Wychoff method, because it's all the same. It's relatively all the same. It's just how you view it. Um, so we see in the after hours on Friday, it started to trade below the 5 EMA, right? And it's coming towards the 20 SMA, right? I haven't looked at this stock at all. I'm looking at it at the same time that we're all looking at it together. Like this is, I'm analyzing it right now, real time. So if now I'm looking at it, I'm saying, okay, it crossed on the MACD. It's still over the zero line, but I don't know. I'm not sure. I don't care if the implied volatility now is below the historical volatility. It's still showing me that even though there might be some selling and I'm buying, but the buying is coming down. This shift in momentum is giving me some type of awareness to look at what the RSI does. Because if this MACD is showing downside and the RSI is also showing downside, that means that RSI can pull back to being oversold in the pre-market, or it'll be oversold the whole trading day until it comes out with earnings, right? Because like I said, we need this stock to continue selling something so people can buy it because it still wants to sell off. It's coming below the zero line. So right now, this is not one that I would say, okay, let's get gun ho and think about, hey, you should buy this one. I'll be really, really sensitive on buying it before earnings and just really waiting for the earnings to come out. The last time it came out with earnings, it did pretty well. Made a new high during the whole, you know, after holidays, it made a new high and it's been holding this same area. So if it holds this $70 area and starts trading eventually above the 5 EMA, which we said the 5 EMA was 43, 73.42, starts trading above that and then starts testing the 220, sorry, SMA price, which is 78.19, then we can say, okay, now the earnings will give it the momentum for it to have more upside, because that's what this earnings should do, right? If we think that the stock will have more downside selling and it just needs that one catalyst to say this is still a good company because we have more growth on the upside, that's what we are expecting when we hear earnings calls on any stock that needs some type of catalyst, that needs some type of movement on the upside. And we could potentially get this after hours on Monday, but you will have to wait for that. And maybe buying in at $75, $78, because if it has really good earnings, it can ramp up, right? But we would want to force that ramp. We don't want to say, oh, it's up so high now and I need to buy it because it's high. No, use your indicators. Say, you know what? Okay, I see that it ran, close to $82. We know that the implied volatility was already too high, so we can't buy an options contract. What does it look like on the MACD and RSI? And then start breaking it down from the day to the hour. Is it trading below the 200 SMA or above the 200 SMA? And if it's trading above the 200 SMA, is it overbought? Is the MACD over the zero line? Right? Does the TTM squeeze have this green zero line with histograms going higher? Right? And what does the implied volatility say at the same time? Maybe it's only a share price play versus an options play, right? So you have to layer these things. It's like, you are finding your potential mate on the stock market and you say, wow, my potential mate, she has nice toes. I like the way her toes look. Man, she has a great smile. I like the way her smile is. Man, she has some ambition, right? She's moving forward, no resistance whatsoever, right? She has some strength behind her. Like, you start layering all these things into what makes this a reason why you should get in this stock. And once you start using the indicators and become familiar with, oh, okay, I understand, how to use the indicators, then you can really start to assess what type of plan you want to have when you put your hard-earned money into the stock market. Because you don't want to buy too high, you don't want to buy here thinking that, oh, okay, this stock is now above the 200 SMA, I should buy. No, but look at the momentum. The momentum is still looking weak. Look at the RSI. The RSI is still over. You don't want to buy when this is red. When this is red, that's not the time to buy. That's the time when you're looking to sell. This is the time when you want people to hold the bag. You're like, all right, and you know, you typically want to hold the bag. You want your money, but you don't want to hold the bag at a higher price that you can't earn money off the bag that you put in. So you want to be at the low part of that, right? Where this is already just coming, the RSI is just coming from being oversold. That's when you want to buy, when it's blue. Like, if you had bought over here thinking that, okay, well, I think this can go up. I think Stitch Fix can go up. It's at its low, even though it's below the 200 SMA, at least you have a better chance of it going higher because it's coming off from being oversold. So now you have an opportunity to say, hey, maybe it can test at 200 SMA price, right? And then it got rejected like it typically does, right? Because it's trading below the 200 SMA. The 20 SMA price was the stronger price, but at least that would have made more sense, right? As opposed to buying up here. So that's what I want you to, if you were to use any indicators, I would say definitely, try to narrow in on these moving averages in the RSI. Everyone on the trading floor uses the RSI and the VIX. Let's go to the VIX. The fear indicator, right? The fear indicator of the market. When the VIX is high, meaning that it's trading over this 25, 24 area, the market goes haywire. This is why we saw the market go red on Thursday, right? You use the VIX to really understand that. Try to, everyone was afraid. The volatility indicator said that, the prices are going to go lower, and that's what it did. And then on Friday, the market recovered, even though it was higher. It was, I shouldn't say it was higher, but it started off pretty bad on Friday, but it ended with the Dow being up 600 points. So I was asked, do I think that the market is going to collapse? No, the market shouldn't collapse. One, because we got the stimulus package coming in, and that's just going to catalyze the market. So we have a relative bottom now, right? So I'm not saying that Stitch Fix, going back to earnings, I'm not saying that Stitch Fix will go up higher tomorrow because of the stimulus package being sent in. That can definitely have an effect on it. But I'm saying that always use use your indicators to the best of your ability to understand where your position is in relation to the chart long term. This is what they say when they say I'm in a position long term. They'll say that they're looking at this chart long term, but you can still take short term profits in between. And maybe with this earnings, it could catalyze it to go higher.
It's never a good idea to buy a stock before earnings.
Say that again.
Like the day before, it's never a good idea to buy a stock before earnings.
Correct.
Unless you're insider and you know exactly what the earnings gonna be.
Absolutely. Like Fitz is right on. Like there's no reason for you to buy any any stock before earnings comes up at all. Even if we go to we can go look online, right? And if you're not 100% sure how to research stocks at all, or research just to get background on any of these companies, you can always come to finviz.com. There's trade ideas.
I want to add something to that too,
Yes.
just to make myself clear. If you want to buy an option before, it is best to buy it like a week before when the volatility is low, or 2 weeks before the earnings. When the volatility is low, so as the volatility climb, when you have an option, then the option price go up. But just make sure you sell it just before earnings. So that's the way you can capture some benefit from the volatility. Because option doesn't matter whether the stock go up or down. From the moment the volatility rise, the option price go up.
Yeah, and that's the biggest thing, is having that options price actually work against you.
Yeah, yes, are with you.
You want it to work with you, not
you have to,
definitely.
yes. So you
Yeah.
buy it before, you buy it 2 weeks before or a week before before the earnings. So as the price rise, your money go up. And when it comes to the day of the earnings, when the price, that is when the volatility rise to the highest, you can sell it before the earnings and collect your money, because you can't tell what tomorrow gonna bring. Because if it you don't know which direction it's gonna go. So that's it. That's my suggestion, and that's what that's what happened. Because all of the time after the earnings, the volatility drops. If the price was up, by the next day the price go down, unless the stock itself the price go up on the earnings. Because some stock, especially now when everything is oversold, the earnings can be very good. Look at Fubo.
Yeah,
Look at the
Fubo.
earnings that Fubo had, and look what happened.
Yeah, Fubo is starting to trend down. You know,
Yeah, food will be in every possible way. Food is like the Netflix. Earnings was like Netflix, so it beat everything.
correct.
And the stock go down because most stocks now are overbought. So they use the earnings to take profit. And now because of the 10-year heel, which constantly rise every time it go up. So this is one of the things that you need to show them to the NX that they can have it on their watch list and observe.
We're
The
we're gonna
the
go right back.
TN, TNX, the 10-year yield. Whenever it goes up, you can guarantee that the market gonna go down. You can buy a put on the SPY, and whenever you see the SPY,
No, and Fitz is right. I did not show it with along with the VIX and the Dow because I use all three.
yeah, put them
We
together.
will do. But I just want to make sure that they see this on the FinViz page when they're
Okay.
looking at when they're trying to zero in on stocks. And I haven't been in Stitch Fix in some time, so I don't know. I thought that the share float was uh, closer to the hundreds, but apparently
Mm-hmm.
it's not. It's near 60.
Mm-hmm.
So 60 million. That's not a low float, but that's
Mm-hmm.
around GameStop,
Mm-hmm.
where GameStop was, right? Around where Overstock.com, Bed Bath and Beyond, they're around this 60 million share float. And the short float for this one is relatively what, 1/5, 50, almost 15%. No, 15% of 60. Yeah, that's about 1/5, right? So we have relatively about 20 million shares that can be squeezed out of this. Not really 15 actually. I said 1/5, maybe 1/4, right? So 15 million shares that can be squeezed out of the availability of the shares that are available on the market. So with this availability, and we see that we have earnings coming up, and we have this type of float size on the shorts, maybe they can get squeezed out, right? The average volume, like what we mentioned before, is 3 point of well, we mentioned that the average volume and the volume that is trading on that day are very important. So we have that 3.8 million is the average. It was 3.3 million on Friday. Less 500,000 less on a day that started red. Okay, that's negligible, right? Maybe people were still afraid and stayed out of the market. Um, so once again we go to we see the analyst upgrades here. We're like, or downgrades. Really, I was like, what they're saying. Do we care about it? No, not really, because a lot of times the analysts are paid off, and they have something in their own. I shouldn't say that they're paid off. They have some type of interest, some type of conflict. But what we do is we look at some of the news. We already see that today, this morning actually, that Motley Fool had an article out. Apparently had Stitch Fix in there. Same thing. Yeah, Motley Fool. I'm not clicking on it because I want to see if there's insider selling or buying. And if you scroll all the way down on FinViz page, you'll see that there is some insider selling, and not even just some, but a lot, right? And so we've seen it from February all the way back into October, maybe even deeper than that. Let's see. Yep. So they've just been selling, right? So that is something that would scare me only unless there was a real reason why, meaning like they had to use the money for operational concerns, right? Because sometimes there would be a company that do insider selling, but you will see it in their news. Like you will look in the news, like, okay, what's going on? Why was there so much selling? There would be some type of news in here. Maybe what day what day was it like the largest selling? They probably sold some back February. Uh, they were selling like 48,000 for a while, and even back in December, even though they're selling all shares, the stock price still went higher, and they were just selling them into the top, I guess. So even the 24th was the last real day. So let's look from December of last year. They had earnings beat, right? We see that they jumped up 30%. We don't so far better than things were looking good as far as the news is concerned. All right. Sometimes you won't get all of these like news articles in some of the trading platforms. So when I was looking at Robinhood, I didn't remember seeing a lot of news. Not for Stitch Fix, it was for WWE that I'm holding, but I didn't see it have all the same news that FinViz had. So so sometimes you'll get some of the articles that are there's some of the articles that are not like actually listed. Um, so when you're on FinViz and you're looking at, okay, you know, what are they saying? They're saying Stitch Fix is no longer a buy. Maybe I click on that. You click on it, see what they say. You know, even though this was back in December, just kind of get a general feel of what's going on with the market, with the stock, I should say, not just the market. And this was back in, you know, December. So, you know, they're trying to, you know, they're probably saying that, okay, it ran already. So, you know, why is it still running? They will have their reasoning, right? And it wasn't anything that was crazy, because it was just Goldman Sachs. They reported on the same day, but they had one on the holiday list, and then they had Goldman Sachs. So maybe this is not probably the best article to go into. Let's see what other articles that they had that would suggest that, you know, it still had upside after they released their earnings back in December. So we see that Stitch Fix short squeeze run up is too much for one analyst. Started back in January. 3 heavily shorted stocks you may want to own. Hmm. Maybe let's see what they say. Why do I want to own it? What is it about Stitch Fix that you say that that's your own? Well, Fubo was in this list. I remember being in Fubo. So, you know, maybe they might have the same sentiments about Stitch Fix. Um, and they say the naysayers have had 3 chances to course correct here. When Stitch Fix sales declined a mere 9% in the fiscal third quarter, which ended in early May and covered the darkest stretch in the pandemic shock, it was time to give it some credit. When the revenue rose 3% in the subsequent quarter, ending in August, it was a clear turnaround way in play. So they're saying that, you know, their earnings gave it some upside. So and being that their short interest is a third of, you know, Stitch Fix public float, that also gives it some opportunity for that momentum to stop, right? So we know that it's a heavily shorted stock, because a heavily shorted stock typically has upside, like Groupon did. Forgot what was it? Man, there were so many. There's so many like stocks the past couple of weeks that we called saying it was going to go up that day because of its previous. But with Stitch Fix, I can't say it's going to go up because, like what Fitch said at the very middle of the analyzing this, is saying that, hey, don't buy before earnings, but maybe you can make some money on the day as a day trade. Um, you know, if you did the day trade, but definitely don't hold through earnings. You know, you could do that if you use your moving averages and see that, hey, the stock is not trading above the stock is trading above the 200 SMA on the hour chart. Maybe I could get a day trade out of it, or it's trading above the 200 SMA on the minute chart. Maybe I can get this day trade out of it and really buy when it's oversold and sell when it goes overbought, because it has to do that during the day. A stock always go overbought or oversold on the day. That's just intraday swings. You just don't want it to do that on one day, on the daily chart. You don't want it to go from overbought to oversold on one day. That's not a good stock to be in. Um, so that's why we wait for earnings. So we wait for the earnings to tell us if this is going to be a good stock. Um, you know, I just kind of went to seeing what it said in the you know, in the recent days. Um, and see with the stock down, is it still time to buy? This is what back in February 28th, last day of February. Shares traded as little as 11. Yep, went to the 100. It's trading around 76 now. That's what they're saying in this article. The business is doing well. And so there's some positive sentiment about it doing well, or at least remarks about it doing well. Um, so, like I said, maybe you go to Twitter, and we're gonna go back to the chart after this, so we can go back to what Fitz was mentioning about the 10-year yield. so you can see what the 10-year yield looks like, and do that in a comparative analysis with the VIX and the Dow. You use those three, particularly in this market, it will give you an opportunity to really realize if the market is going to go up or go down. So when you go to Twitter, you type in the cash sign and the ticker symbol of that stock that you're looking at. And once we go, it will tell you top. I usually go to the latest, because I want to know what they're saying now, and seeing if I'm in that same momentum. And as you can see here, uh, you know, we're seeing that Seeking Alpha, and they're just Seeking Alpha is another company that, like Motley Fool, they have analysts, that have seasoned pros that have been looking at these stocks for so long. I'm only 2 years, really 3 years. This year would be 3 years in the game. Like there are guys and gals that are in there for 20 years. So you'll get those analysts that will have something to say about the earnings and whether they think is good or not. Um, you'll see what other people are looking at when it comes to earnings. Now that this person mentioned it, they mentioned Disney. I do believe that I would love to put in some money in Disney because they had good earnings. So I know that they will go up. That's one to buy, um, to keep as an example. Um, and see what else, other people are anticipating the earnings of Stitch Fix. You'll see what else they're looking at. NCMI, I believe that's a shipping company or something. I remember seeing that moving last week. Um, what else? Let's see what else. So I'm not seeing a whole lot that's just like enticing me. And what I say enticing is like you see individual traders and trading groups that talk specifically about that stock in particular. They have their own idea about it. You'll see that on Twitter. Um, like my man right here, Frank Wang. Right? Like he said, I wasn't a believer in Stitch Fix. Like my friend, I still nibbled a little bit. It turned out to be a great investment. So you see, what else they're looking at. You tell me he does look like Posh. Maybe Poshmark. Now that they're an IPO, they might put out some good numbers too. So that might be something that you want to look at. Um, you just see a couple of people, mentioning it. So they're just saying, yeah, it's after the bell on Monday. So clearly they're doing their research as well, or have done their research. Um, so as we go back, let me go back to the actual chart so we can see Stitch Fix itself. So we're here at Stitch Fix. Like I said, not feeling it as uh, 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 buy before earnings, but like what Fitch said, maybe you can get in on the day once you become familiar with seeing the movement of how stocks move. You see that, hey, it's testing this 200 SMA on the hour chart. If it breaks 77.62 on the day, that means it has some upside, and maybe it can test resistance at 82. That's a $5 upside, right? If it does all these things, that's a $5 upside that you could potentially get on the day, for a day trade. Now, would you buy an options contract on that? I do not know.
Look at the volatility.
But that volatility is too high, right?
Yeah, so there's one place it can go, it's down.
Down, like it would
Right.
have to go down. I said NXT. Hold on. The 10-year Treasury is NTX. No,
Yeah.
it's NTX, right? Or is it?
NXT.
That was NXT, right?
Hold on.
No, because I
It's
have it in my
TNX.
TNX. Okay.
TNX.
I know I have it on my watch list, but sometimes I don't remember them all. I don't remember it all the time. That's why I have
TNX.
So this is the 10-year Treasury. This is what everyone was freaking out about. No one wanted to buy the debt. So because no one wanted to buy the debt, they had to push up the price. So this will be a good indication of inflation that will happen in the next 2 years at least. But anytime that this is high, right, meaning that it turns green, kind of like the VIX. If it goes green, meaning it's going up, that means that the market will typically go down. Um, and we can compare that
Yeah.
to the Dow, what it did on the Dow. So remember that this green candlestick on the daily chart was Thursday. This is Friday. We go to the Dow, which is the cash sign DJI. We see that on the day, on that Thursday, the market was down. It was red, and then it was green on Friday, right? So it's pretty much the flip of the 10-year Treasury note. So keep that in mind. Use that as an indicator as well. When you want, like
Yeah,
when
make
you
sure
wake
you
up in
have
the
it on your,
morning.
make sure you have it on your watch list. Yeah.
Facts. Make sure you have it on your watch list. When you
And
wake up in the morning, you'll know.
one of the thing about it is that sometimes is that as it go up, the market go down. It go up. Sometimes it go up a little bit before the SPY start to go down. So you have enough time to buy a put on the SPY. And the moment you see it jump up like $40, $50, you can put a put on the SPY right away.
So this is the SPY.
So it's gonna go down.
This is the SPY, right? When we come out, so this is the hedge strategy that Fitz is referring to is about putting on a short position on options when it comes to the SPY when the market is pulling back. On the Thinkorswim platform, what we have is this trade tab, and when you come to the trade tab, it gives you a list of options. All right. So if you ever want to know what the options look like for that index or company stock, you just tap the trade tab, and it will give you all the options contract. So what happens is that so we can orient ourselves here as well, right? Is that I have the March 19th contracts open because that's what I've been trading, meaning that the contract in March will expire on the 19th, right? This is a monthly, right, contract. You do have weeklies. Weeklies can be a little bit more expensive just because of the deltas. Well, not the deltas, the thetas. The theta is, without going too deep into it, pretty much it's their time decay, right? So it takes money away from your contract. The delta puts money in your contract, and so does the gamma. But the gamma also measures that volatility, between price points on the contract. So when Fitz and I are talking about what is the volatility, the implied volatility looks like, that's what is being measured by the gamma, is that volatility right there, right? Do I want to buy a price right now? It's like on the day, it's lower than the historical volatility. Typically that's what you want. So to save yourself agony from buying a contract, and then when you buy that contract, you start in the negative, you don't want that to happen. You want to wait until the implied volatility is lower than the historical. You want it lower than that. Maybe a little bit lower than this would even be helpful, right? Because you can get probably a lower price. But once the implied is lower than the historical, you have a better price than it being the implied above the historical price. Um, so what Fitz was mentioning about buying the put is that we have our contract. We know it expires in March 19th. And then we have here, as I scroll down looking for in the money and out of the money, we have this highlighted portion, which is in the money. These are in the money contracts right here, meaning that the price, the strike price, which is listed here, says the strike price, um, starting at 384 is all in the money, right? Of this stock, this index. Right now, it is in the money because after hours it's still trading at 384.34. So, even though it closed at 383, the in the money contracts is 384. So now on the call side, which is this left side, you have it where people are calling the stock to go higher. And then you have the put side, which is on this side, people are calling that the stock will go lower. So I said that this highlighted section is the in the money. This non highlighted section is out of the money, meaning that the strike price has not is not being traded essentially. Um, Typically, if you want to buy an option, call or put, you want one in the money, maybe two, but definitely one out of the money or one in the money. And the reason why I say that is because we tend to look at the price and think that, oh, because this price is lower, it's
Mm-hmm.
cheaper and much valuable, I can afford that. And you start looking at the other things like, oh, well, the delta, which is something that you should consider when you're looking at your option contract. You look at your delta, and the delta is above 30, which is good, at least better. But you want an options contract that has a delta that's more closer to that 40. One person that I really follow, he says anything above 30 is great. And I said, okay. Um, I typically like them when they're like in the 40s, close to 50, because the delta tells you the percentage of possibility that stock or index can go to the next dollar. And the higher this delta is, the better, because now it can go to the next dollar and it's okay. And as you see, every time that the contract goes further and further in the money, the delta goes higher and higher because it's saying that it can go to the next dollar up. And this delta is what's being added as premium. So a premium to when you want to sell it. So that means that you get more value for your contract when you do sell it. So with that being said, it only makes sense to buy it one out of the money or one in the money. Because if you do buy a contract that's way out of the money, yeah, it might be cheaper, but the chances of it actually expiring, because remember, these contracts have expirations, right? You have a stock, those shares you can sell at any time. These contracts, they expire at a certain time, right? So the chances that this contract expiring, we said what, 193. So we'll say, oh no, 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 393. We'll say that the 393 strike price expiring in the money is 23%, essentially, the probability of it expiring in the money before March 19th comes. That's what you're saying on your options, right? That's when you're looking at the delta, that's what you're looking at. The delta is very important. The theta is just as important because that's your time decay, right? You don't want it. This is Vega. Sorry, you don't want the time decay to really to get too high, right? You don't want this to be at 50 and your delta is 40. All right. You want this like negative 21. Okay, that's pretty good. Like I probably would still go for that. But just know that this cent price is being essentially subtracted from, wow. So this is moving. Oh, it's coming out of the money now. Yeah, okay. So the SPY is coming out of the money right now. It's at 384 is out of the money. It's moving right now. Um, so that's what this delta is saying. That's what this theta is saying. It's going to take away from the actual delta that you're trying to create, essentially. And the same thing on the put side. So like let's lean in on what Fitz was saying. uh, the delta is still the same, right? It just has a negative on it because now with the puts you're betting against the stock, right? So you might see negative 50, but that's actually a good thing because you want the price to go from, you know, from $6.90 to $6, $5, $4. You want it to actually decrease. Um, I usually don't short, but Fitz, if you want to go a little bit deeper in the on how you would play this put, please by all means let me know.
Well, the 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 market is still unstable, you know, because since I came in a while ago and joined the program, it was up like about um almost $1.50, and it's back now to about 30 cents.
Mm.
It's still fluctuating up and down. We're watching the futures on Bloomberg, and that's what's happening. So, um, what I noticed, I've been watching it, observing it from we start to have the 10-year yield problem, and whenever the TNX go up, because of that, the SPY go down shortly after, not immediately, but shortly after. So what I did was to put remember I told you last week about the SQQ. I
Yeah.
had a call on that because and whenever the SPY goes down, SQQQ. Whenever
Okay,
the
so
SPY go
that's but
down,
you didn't buy it on the spot. You bought it on the SQQ. Sorry.
yes, I bought the option. I bought one call option going up on the SQQ, and I also use the SPY as edge going down. Whenever it turned down, I hit the what is like that is like the day trade thing. It just hit the send a market order right in right away for the put and follow it on. But I use the stochastic to see watch the turn. The stochastic indicator.
Yes.
Yes, I use it to follow it up and down on the 1 minute, up and down. So whenever it go down, as soon as it turns, because you know it can just like the RSI can only go down to a certain point and have to turn. Whenever I turn back up, I come out and so on. That's what I had to do.
So the SQQ is another index, I should say.
SQQQ, the
Yeah,
three Qs.
SQQQ. Sorry, I have it. Can you see the chart at all?
And the options are very cheap on that. So you can that's why you can hedge it. If you have position like stocks, you can use it as an edge if when the market is unstable.
All right, so let's go through one of the options that you use when you were hedging against it. Because, like I said, even though I know when a stock is going down, I rarely short just because I don't want to look for shortable shares or anything like that. But with options, that's a good thing. You don't have to look for shortable shares. You can just find the contract and go and ride the wave on the downside. So uh, let's say now, right on the short side, Fitz, if you were shorting this, what contract or how would you approach this? I should say.
Did you mean the SQQQ?
Yes, that's what's being showed up on the screen right now.
Yes, yes. Um, I'm looking at it on the E-Trade platform
Good,
right now.
good, good.
Well, what the first thing I would do is to see what happened in the morning. It doesn't go fast. The volatility. Let me check on. Let me put it on the Thinkorswim and see what the volatility is like. The volatility is low right now on the 15 minutes on the daily. It's halfway on the hourly. It's coming down. So as I said, because the options are very cheap on it, I
Right,
use it I use it as an edge.
right,
So it doesn't go up, but it still saved me some of the money. It's not volatile. You understand what I mean? It don't go very fast,
right.
but at least it's still I'm making a small money from that. So my shares, my own shares. So when those prices are going down, it sort of help to balance it. Say for instance, 1/3. It provide 1/3 of the balance. And whenever the market turn, I just come out of it.
So it's like you're just for because the ladies that are in the chat, they probably are not familiar with the
Okay.
options. So you're saying that you use it kind of like you gaining interest on a day that's
The market going
red.
down.
Yeah, the market is down and it
Market is
gives
going down. So
mm,
the SQQ is going up. And if you notice, even I'm looking on the 19-day, that's March 26, or let me even go a little further up. It's 40 days. The price of it is $15 right now, and the options at the $15 is just $196. The option at the 16 is 158.
Oh,
So
which strike price are you looking at for March?
I'm looking at it, the April. I'm going to April
Oh,
now.
April. Sorry. Okay.
Yeah, but I don't want, you don't have to go
22.
so far. But I'm looking at April 1st, which is 25 days, and the 1550 is 135, 137. Sorry, the 16 is 122. So it's basically, you know,
Oh,
it's
okay. So I'm trying to follow the strike price for April that expires April 16th, right? April 16th. The strike price is which one now?
hold on. You're looking at April 16. I'm seeing April 21st here. I mean 25 days. I'm looking at 25 days. That's the first one. April 1st.
Oh, you're looking at the weekly.
Sorry.
Looking at the weekly.
Yeah,
Yeah.
maybe the weekly. I'm on E-Trade. It's just it's a little different from the.
No problem. I just want because the contracts are still the same. It's just making
Yeah,
sure that it's
but as you notice, the prices are small there.
Mhm.
And it's just like it have like 15, 15, 50, 16, 16, 50, 50, 17, so the prices is almost like this. It's set up almost like the SPY.
Yeah, like
The,
50 cent
the width
increment.
the width between the width between it this the bid and the ask are not very big.
Correct.
So what I would do, I would observe if the market is unstable and I see the TNX go up anywhere between, from the moment I see it start to go up 20 past 20 cents going up, I know that there's some trouble. That doesn't have to be long term, but as for the moment I see that going up, I know that I can buy a call option on this. When the market going down, you buy a put. You can buy a put on it. I mean, so when the market going up, when the SPY is going up, because we call this SPY, the market basically the SPY.
Mhm.
When the market is going up, you can buy a put on it going down. Or buy it at the money. If you're gonna buy it at the money. And if you're gonna sell it at the money. I mean, if you're gonna buy the put or the call, make sure you do it at the money.
Right.
Because it does move very fast. So if you're gonna get the maximum amount of profit, you want to buy it right at the money.
At the money. At the money or
Yes.
one in the money. One of the two. Never
Yes.
yeah.
No, the reason
Not
why
too
I'm
far out.
encouraged, yes, because it have like 15.50, 14.50, it have 50 cents between. So, it's not bad. But
No,
don't go too far out because it's not a very volatile instrument. So because it's not volatile, you're not gonna make a lot of money if you go too far out.
right.
So you want to make sure you catch it as near as you can, right at the money or just the next strike above the money. So if it's 15, if it's at 15, you can either buy the 15 going up or down or the 15.50. Don't go beyond that. If it was something volatile, you could buy it even up to the 16 because when it moved because of the volatility rising, you would make a lot of money. But it's not really volatile unless it's a crash like what we had in when the COVID came in, then you would make a lot of money. But otherwise than that, you want to get it very close. But if the market is going up, you can buy a put on it, which when I say refer to the market, I mean the SPY. And if the SPY is going down, you can buy a call option on that one. And as I said earlier on, when you see the T, if you notice tomorrow, because as I said, it's a little unstable right now, so it's showing me that we don't know what tomorrow gonna be.
Mm.
So if you want to hedge, and you see the T and X going up, if you see it even go up 20 cents, look for the market to go down.
So that's a good rule to even have right there.
Yeah. So
Uh,
make sure you have that. on your watch list and observe whenever you see that move up, the market is gonna go down. So you can also buy a put on the SPY. Hit it right at the money or the next strike out of the money. But you know that is short term because you just ride it for a little time. Whenever you see it turn and start come back up, you're out of it. So it's not for a person who is just learning. It's for. I'm just saying you have to be very quick on that one.
Right. I think understanding the concept that
Yeah.
when the SPY is going up, you can short the SQQQ in relation to that. And
Yeah.
in addition, use the TNX and the VIX to see if the market is going down. Because if the VIX is above 24, then you definitely know that there's a lot of scare. Everybody's shaking in the streets, and then also when the TNX is green, going up as well, then you know that there is definitely some more downside ahead. That
Yeah.
volatility is really strong. So these are some really good rules that and gems that Fitz has been sharing with us. Um, so I like that. I like that, and I know I said I wanted to get into some rules also, but I know it's 8:37, so I want to get more into the stocks. That but does anyone have any questions thus far? Like I know that we've been sharing a lot, and I don't want all of this to go over people's heads. I want to make sure that you understand what you're looking for um, when you're searching these stocks, like what you're looking for, because I can show. We only went through one earnings, and that was Stitch Fix, and that can kind of give you some background understanding of what to do when analyzing a earnings stock that's going to come out. But I'm not the one that's controlling your fingers on making the buy and sell. So I want you to really be able to see and understand that where you're buying and where you're selling at.
One question. The sister that was on the program who bought Pfizer, is she there tonight?
I Was that Keisha or Ariza? Ariza. I don't. I know it wasn't Pfizer. I don't think, was it Pfizer?
Yeah, she said a friend told her to buy this 50 option
I know.
way out of the money.
Was it SP? Was it SRPT? I remember that one definitely.
Yeah, it was Pfizer.
It was Pfizer.
Yeah.
Well, it's looking to consolidate. Here we
That's
go.
that's what I'm saying. It's now is the time to buy it.
Yeah. 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 Yeah.
But don't buy the one that the person mentioned. Buy the one right at the money, or maybe one out of the money. It's either the 34 or the 35.
Yeah. I would
Yeah, you
probably
don't
get
want.
the 34, maybe 33 at the most, but maybe 34.
Sorry.
You're definitely safe with that.
Yeah, you can but don't buy it far out of the money and buy it for long. Don't buy it for less than 60 days. If it move up earlier, then that's good, but don't buy it for a short time. Buy it, make sure you buy it, it have a lot of days on it.
Yeah, like
Because one of the good thing, I think the volatility is very low now. If you look at it, check the volatility.
I was looking at the contracts, like no, everything was low. Like it's coming off, like
So
everything is super low. Like
yeah,
this is the one. This is the time with the whole Wychoff method. This is
yeah.
why I love seeing that method so much, right?
Mm-hmm.
Because we see that $33 area one is being held as
Mm-hmm.
support, and then two is trading close to the 200 SMA
Right.
already. So these moving averages have an opportunity to cross, and then three we see this.
It
It's
close above the
slightly,
5.
huh?
The stock is above you use the 5, the stock is above the 9 on mine,
Yeah, it's
on the
above the
daily,
five.
and
It's
it's above the 9. It closed above the 9, which I
yeah.
use as a guide. The MACD cross, the stochastic pointing up, And all momentum and everything pointing up.
Yep.
The 1 year momentum indicator pointing up.
MACD is like it's trading. This is definitely like where, you know, it had its downside. This is where everything was selling off, and it's this holding support. And we do have that cross in the MACD, and we have the turn up on the RSI, and then we see that all this consolidation on the zero line
Yeah.
provides an opportunity now to say, hey, if I were to buy, you know,
Now
that's why
would
I
be the
said
time.
33. That's why I
Now
said,
would be
hey,
the
maybe
time.
the 33 call because that's still support.
Yeah.
And you know, my thing is that the price usually gets rejected at the 200 SMA, but everything is curling up. So these these prices might eventually just be trading between $35 a share, 35 and $36 a share
Mm-hmm.
for some time before it actually really ramps up, and it has that
Right.
opportunity. This is a good one. This is a good one, Fitz. Thank you for bringing
Mm-hmm.
this.
You're welcome. And I also want you to look at GILD, GILD.
G. Oh, Gilead. 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 Let's see what you're doing. Gilead. So, oh, same. And they got dividends. This is beautiful. Their implied volatility is kind of high, so they might get rejected at the 200 price,
Yeah.
kind of like what happened here
Oh,
and here. But
the volatilities.
yeah, but maybe it'll have this trading sideways effect. It trades sideways for some time at this 64 $65 area, maybe even 66 before it fully crosses over that 200. It just needs to cross over that 200. There's something about that 66 $27 area, $26.27 area that's making it get rejected. Um, because that's what this is 70. So it's right around here. So it dropped in price back here. This was what, August 17th, 18th. What happened? What happened back there? And could y'all amend it? Let's see if it goes back to August. Nope. I have to go back. Now I'm curious. This is where curiosity kicks in. You're trying to do some research to try to figure out like, well, why did it gap down at that price, being 68, 66, and were they able to recover it in the meantime? Even though they're, yeah, and they were upgraded by Morgan Stanley, of course. Of course they were. What happened back in August? You're not telling me either. There's no news back in August. What's going on? Either way, the news right now is obviously is looking good. At least the supply and demand, the price action is looking pretty good. But I still want to know what happened back in August. Like what happened? What happened in this gap down? Like what brought it actually down? Um,
All right. Look at this one instead because it's not figuring. CHKP. I know it's below the 200, but look and just take a look at it.
Chesapeake, CHK,
CHKP. Checkpoint Software Tech.
KT,
P.
P as in
KP.
Paul.
Yeah.
Gotcha. That's another one. It's going to consolidate for some time, but not some time.
Look at what happened last week.
And it gapped down during earnings.
No, but look at you see the Friday it was almost $4 up.
Yeah, like it's a strong green candlestick.
Right.
Yep.
And this is just about to cross, even though it's under, it's a lot of way to go. The TTM Squeeze going up nicely,
Mm-hmm.
and the momentum. I add a momentum indicator on mine, one that I used to have, and it's almost at the zero line coming up. So everything is fine. That's on the daily. So it looked
Yeah.
good to me.
And it's holding $110 a share as its
Right.
support price. So
Right.
as a support price, this is like beautiful in a sense because we can see back here, what was this May, June, like it held that price as resistance before breaking through and trading above the 200 SMA price.
And the volatility is right halfway, which is a good tool.
You know?
Volatility is right. I put my volatility right on the TTM Squeeze because both of them work together. So it's right at the halfway line, not the zero line.
That was there. Now, tomorrow, if this starts trading above the 200 SMA, it's definitely even a stronger buy for me. Like it's already a strong buy as it is on the year chart, but this just gives it even more exponential room. It's not overbought yet, which is good. So that means it has some time to like trade a little bit
It have
sideways,
a lot of room to move
validate.
now.
Yeah, man, 100. There was one that came out with earnings last week, and I feel that it kind of has the same type of move, but you know, you know how some of these stocks go.
Mhm.
I'm trying to remember which one it was. It was. I'm about to look through the phone. I remember it was mentioned to me, message to me.
Mhm.
I was like, okay, I could see that, but not right now. I needed to consolidate. Um, where are you? Where are you? But yeah, Checkpoint does look like a good one too. Checkpoint looks like a good one. So we got Pfizer, Checkpoint, Gilead. Uh,
Yeah, if the market is good tomorrow, it is gonna be very nice because I had the stochastic and it's right at the bottom, just crossing from the bottom. So the good thing about what this is showing me that it have a long way. It's gonna, if it really move, if it pick up some traction, it's gonna go right up to maybe about 120
120
before, almost at 120 before,
at least, bare minimum.
Yeah, yeah,
Bare minimum. Yeah, because it can even go higher than that. It can make
yeah.
a
It
new high
can go 130,
above 140.
139,
Yeah,
139. It have a resistance of 139. So it looked good.
facts.
What
So
but what time frame are we looking at? Even
the
if we were to
daily
put an option out, would it be maybe a 90-day or higher out?
60. It all depends, but the lowest I would recommend is 60.
Thank you.
Yeah,
But one of the good thing about option, you don't have to wait on 60 days in order to get your money. If the
facts.
stock, if you put the option on tomorrow and the stock go up $10, what are you gonna do? If the market give you $10, take it because you don't know what's gonna happen the next day. So, but the good
Right.
thing about it, when you put it on for a longer period of time, it have the privilege of dealing with the ups and downs. If it doesn't go in your favor right away, then you can patiently wait on it because the market doesn't really stay down for long. Especially now, it doesn't have no reason to, because with a lot of money coming into the market, everything you're not gonna fall like when the COVID came in. But the longer the period of time, it give you that flexibility to wait on it. But if it goes up tomorrow, $5, $10, take your profit. And if it come back down a little, you jump in again. But just always try to secure. Or if you do more than one contract and it go up, take off one and lock in that profit. That's the way to go.
Okay. Thank you.
Welcome.
No, you're right. Like,
As well as also let them know you can buy a spread. You can buy spread. Sell one above and buy one. So you buy one at the money and then you sell one maybe $5 up. So it cut your price to half. Instead of paying $1,000 for the option, you pay you might pay $500. So you buy two spread, the market go up, you take off one, keep one. Like that.
mm,
You can do that too, just to make
definitely
sure
don't
that
want
you
to
don't.
over flood like with different trading strategies. We definitely just want to have a get this one solid, consistent strategy of like knowing when to buy first and then knowing when to
Okay,
sell. Because
okay,
because even though you and I might understand how to apply it, I don't want to assume that everyone else would be able to too. And then they try
okay,
using it and it puts them in a, like once knowing that, hey, I got this one consistent strategy that I know I can consistently profit off of. All right, let me
okay.
start adding stuff now that because I'm comfortable with this. I have this one solid, like this, like that's really, what your one solid is, Fitz. Like
Yeah,
this one is like, I know every time, always make money off of it. Like because you
yeah.
put in because you've seen it over and over and over again, right? So like, oh, this is consistent. Like this, I know that the checkpoint and Gilead, those are going to put in profit. Like if we get in even in now, like what how everything is holding support, like the market comes out green tomorrow potentially, right? Oh, we can get it at a good price with these positions. Maybe
One of the
checkpoint
things,
checkpoint has a higher implied volatility, but it still has upside.
yeah, one of the things that they need to know too is that when you're buying option, make sure the open interest is at least over 100. The higher the open interest is, it's better for you when you're buying because it give a close bid and ask. Because I'm looking at the options and they are very okay. For instance, the ask is five. I'm looking on the 40 days, which is April 21st, and the 15 is 520, which is the ask, and the bid is 290. That's a loser for me. Buy it right there.
Oh, for which one?
For the 40 day, like April 21st.
April 21st. Oh well, April
Yeah.
16th. You said which contract?
The 15.
115.
Not yeah, 115. If that's if you're looking on checkpoint. The one on Guile is cheap. The option on Guile is much cheaper.
So just so they see, right? Because this is what Fitz is referring to, where he would have like, you're essentially you might get in at a bad price because this spread is so wide.
It's so wide,
The
yeah.
bid ask is $2.90. The ask price is $5.20. When you have whatever you pay for in between that, that's what the market maker gets.
Mm-hmm.
So you don't want to pay the market maker that much money just to get in a position early, or because you especially when you see that implied volatility, like you want that spread to be a lot smaller. And also, this is the open interest, right? So on this column here, you have the open interest, and I have this. You have to like kind of like lay it out in a way where you can be able to see the um, the numbers behind the actual option contract strike price, because like I have it where like option liquidity, because I want to know what the volume is going to be option, and then open interest, and then I still have the price there, so I know like, okay, like is it worth that price, knowing what the volume and open interest is for this contract, right? And you also, like I said, you want to know, the Greeks. You want to know what the delta, gamma, theta, and the vega. The vega people pay attention to it. Sometimes you don't. It's the volatility indicator too of the actual contract. So like, but it doesn't really get much consideration as the theta does and the delta does, right?
Yeah.
So yeah.
one of the things I would suggest for beginners, this up this checkpoint here, the bid and the ask is too wide. I would not suggest you get into one like this
Correct.
because it's not it's I think like I would stock like Guile would be a better
That's Gilead.
Gilead, yeah, Gilead would be better because the bid and the ask in that is much closer.
Yeah.
And that you can do that for the long time. You can do that for the as you mentioned, 90 days or 60 days
Mhm. I think Pfizer, when I briefly looked at it,
or
had the better
Pfizer.
option.
Pfizer.
They had the better
I
option
would
for chart.
encourage anybody to do Pfizer right now,
Like,
based on what I'm seeing the movements now. So you know, if you notice, they are much closer. If they are looking on their platform, they can see the bid and the ask there are much cheaper and are much closer.
you know,
Checkpoint is you're gonna start out on checkpoint at a loss of at least 50 cents, and you don't want to do that.
the thing about Pfizer that I like already right now is when I look at
Hmm.
their hour chart, is that they're trading above the 200 SMA.
Yeah, I have an option. Let me see. I have a call on it, you know.
I think that's smart.
Yeah, I remember I told
That's
you
smart.
last week. I bought because but I bought it for April 21st.
Yeah,
I bought the 34, the 34.
I love this. I absolutely love this already. The
Yeah.
moving averages have crossed over the 200 SMA on the hour chart. I pay more. I give more adherence to the hour chart
Mm-hmm.
for especially for overnight trades or
Mm-hmm.
even weekly trades. Like I give more credence to the hour chart than I do to the daily sometimes. And I feel like I've profited more off the weekly off the hour chart more.
Mm-hmm.
But
Yeah,
this
because it's a
one
long
here,
term.
this has some upside mover for more than just a week.
Yeah.
More like
You can
literally.
you can buy this for the 90 days
Like
and
yeah,
leave it just like that.
like,
May buy
yeah,
more than one, may buy more than one contract too.
this might be, I might end up buying this tomorrow. Like this might actually be like my buy. I said I didn't want to trade any pharmaceutical companies that deal with, because it's buy the rumor, sell the news. We already know
Right.
that the vaccine is out, so everyone done sold off on it. So now it's just like, well, whatever negative quote unquote impact that the vaccine might have, these pharmaceuticals could take a hit, right?
Mm-hmm.
But when I look at everything about Pfizer's chart, it's showing the symptoms of that Wychoff method, where you have the opportunity for the moving averages across, especially since now it's trading above the 200 SMA on the hour chart.
Mm-hmm.
Like I said, when we talked about rules at the very beginning, because you weren't here at the very beginning, that's the rules that I have hard fast. Hour chart trading over the 200. Um, I'm gonna show you WWE. I mentioned this so many times last week. I mentioned it so many times. This some Weight Watchers. I'm in WWE, but I mentioned Weight Watchers first, and then I said WWE because after earnings, even Weight Watchers, I knew this was going to rise because it's the same low float, much upside. Still looks like it has upside, which is crazy because
Mm-hmm.
I like my rule
Like
says do not buy because it's overbought now,
overboard. Mm-hmm.
right? So I would leave this alone. But what does the hour chart say? So much upside that it wants
Yeah.
to break this resistance here and test 38, right? So I'm like, wow, like so that's one thing that I've used, and this is why it's good to have your times layered, because on the day chart, yeah, my rule says do not buy when it's overbought on the day chart, but the hour chart says I still have much room to go.
Mm-hmm.
WWE, and I know that we didn't go. We need to go into like actual buying and selling, like actually executing that.
I'm seeing some news on Pfizer. It said that Russian disinformation campaign aimed to undermine confidence in Pfizer. So
Mm.
they realize that a lot of the information is Russia trying to push it.
Oh yeah, Russia's been trying to do that. Then the North Koreans last week. did because someone had to come out with cybersecurity information
Mhm.
saying that they got hacked last week. It
Yeah.
was
Microsoft.
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 Oh,
Yeah.
there it is. So yeah, we know the Russians are still at play. So especially with that, that's like drug cartel, like
Yeah.
the vaccine, which is crazy. Um, but yeah, so this is one play that I have that I'm in right now, and particularly why I love it so much is because it crossed over to 200 SMA. Is doing the same consistent thing. We never think of WWE as we just think of it as people that are just flying and doing flips and wrestling on TV, like calling out people. Well, at least I'd look at them as like yelling at people. Like I love it when they just anyway. I love it when they just call people out and tell them that they ain't shit. Like yo, like you ain't shit. Come out here, come fight me. I'm gonna tell you what you need to do about yourself and your mom. Like I love all that stuff. So that like gets me interested. So I enjoy the product, but at the same time, when you look at the actual chart itself, once it's trading above that 200 SMA, it just tends to go higher, and it's trading above the 5 EMA. That's what it did before, right? And it's doing that again. It did that all up until it made a new high, and then after it made that new high, it pulled back like it's supposed to, comes to the 200 SMA, a whole Wychoff method, right? Comes down, consolidates, consolidates, consolidates. The 200 SMA is that indicator of where it's bullish or bearish. And then after this whole consolidation, the 200 SMA price now converge with the 5 EMA and the simple and the 20 simple moving average. So now it's just going to trade up higher. My strategy, excuse me, I'm burping over here talking. My strategy is that I would prefer to hold this until it creates a new high, or which it should. I don't think it should not. I think it's going to do this until WrestleMania happens. So like it'll create a new high, maybe go to $70, and then I could sell. But I just want to trade the chart. So once this says it's overbought, then I'll sell because that's what happens. It will be overbought first before it pulls back. Every time it goes overbought, then it has an opportunity to pull back before going back up, right? So that's what happened over here. It pulled back on the RSI, but it still went overbought. Pulled back a bit, went overbought, made a new high, pulled, and then once it makes that new high, it pulls back. So that's oversold. Something had to pull it back to be oversold. They said it was earnings. So earnings did that, pulled it back, even though I think they came out with positive earnings, if I remember correctly. Um, but either way, I know that they were doing agreements with the Peacock channel, so
Okay.
they were getting movement with NBC and all this stuff already. So that's why I was in it before. So I was in it before during this run up. So that's why I remember. And I sold before earnings because I do not hold when earnings come. So it feels like so long since I held this. Like I'm just remembering all of this stuff now. Like
Yes.
so much time has passed.
I, I'm also made a little thing from BGS too. Big
BGS,
BGS Foods. Yeah. I'm in it right now too.
BGSF.
BGS.
Oh,
BGS.
well, BGSF doesn't look too bad either. Doesn't look too bad at all. Make sure that's recorded. So when I come back to it, you said BGS.
Yeah.
Got you.
It went down, but it came back up as you can see.
Oh wow.
It
Yeah.
when the market going down, it was very strong.
Oh yeah. Oh yeah. Yeah. This looks really good here. I like
Yeah.
this.
I'm in it.
Foods was doing pretty well. I was in UNFI. I
Mhm.
ended up buying it prior to the earnings run up. I bought on this day and I sold here. They actually come out with earnings this week, so it was good that I knew about this. But I bought on this day because of bullish
Mhm.
engulfing pattern, trading above the 5 EMA. I sold it at 9:45 because just to have it recorded so it's understood. It was overbought on the hour, and it made a new high. So I felt like I needed to sell when it happened, so I could just collect my profits. It did pull back, and yesterday I did buy one contract. I bought a $40 contract in this one. I bought a $40 contract, which is two out of the money, which does break my rule. But at the same time, I did it with a smaller account. So I bought this contract, which is 29 on the Delta. Um, Hold on, let me make sure that's the right contract. So we about UNFI, the $40 call. Yeah. So I am up in it, so I'm not mad, but at the same time, I know I could have got a better call. Oh, this is April. Let me go back to March. So you can see $40 call. This is 110 and 125. There's the 25-cent delta. So I knew what I was getting myself into because I was like, oh, I have an account that I want to raise. I just put in $150 in it. Let me just go ahead and see, if I hold this, how long, will it provide me with, potential gains? I feel that before I would probably be selling this before earnings, more than likely, because their earnings is a couple of days. Their earnings is actually happening. What was that day? I think it was Thursday or Friday or Wednesday pre-market. I'm trying to remember. It is so it seemed like foods. Yeah, Wednesday pre-market. Yeah. So it seemed like foods
That,
are been doing something.
yeah, that looked very good there too. That one looked very good because the MACD, look at the MACD right there.
Yeah.
That
Yeah.
looked excellent. And the squeeze, look at the squeeze on the bottom.
Yeah.
Volatility is right too. So there's one direction and that's up.
That's what it looks like. That's
Mhm.
that's what I'm anticipating. I still don't want to hold through earnings, so I still have like 2 days
Yeah,
to
so
hold
let
this.
keep it until the volatility go up.
Yeah, because
Sell
that's
it
what's
right
happening
before
already.
earnings.
You have to run up before earnings. That's what is exactly it. This is the
Yeah,
one.
you wait until the last minute, 10 minutes before.
And I'll show you the options contract on why I did
What
sell. I sold it. It
let me
was a $30 call that I had when I sold it. Um, it was. I was like, oh, okay. You know, it wasn't too bad. Nice little entry. This is my WWE call that I'm in right now. So you see? No, you can't see it. Can you see that? No, you can't see that. Sheesh. Forgot. This is the WWE call that I'm in right now. Um, Let me put up the UNFI. So why are the numbers not coming up? They're still not popping up. But the price points are not popping up. But essentially, I sold in this run up here.
Mhm.
So I knew that it had, once it was above the 5 EMA on the stock price chart the day before, I knew it had some type of opportunity to go up higher. And as you can see, it's overbought. When it's overbought, there's no other reason for me to hold it at that point. Like
Mhm.
I'm looking at selling. And then once it pulls back, then I can redecide if I want to get back in. Then you have to go through the analysis all over again. After you sell your position, think of it once again as a brand new stock, right? Don't think of it with the same sentiment, like, oh, I sold it and I can jump right back in, 5 minutes later. It doesn't work that way. Once you sold it, you liquidated, the amount of shares back into the market. So now you have to reconfigure yourself back as if you're seeing it again for the very first time. Because now that it's overbought, because you sold it when it's overbought, you need to wait for it to come down and be oversold because it needs to get oversold at some point. Um, which it did. I think this oversold, not quite yet. No, it went overbought again. It's retested the high again the very next day of anything. but it just kind of just, traded sideways. Um, so we'll see with that one. We'll see how that, well, at least, well, this is the $30 call. So with the $40 call, it looks totally different than this. It looks, so know that each option contract definitely looks different, right? That they all have a chart, and because they all have a chart, you should look at it and actually get an idea of what it is. Because when you use like Robinhood is only going to tell you the price points. They're not going to tell you where it is on the chart, because you could be buying it when it's way too high, and we don't want that. Um, did it switch? Did it send the contract there? Send it one more time. Let's look at the contract. No, you are. Oh yeah, you did. Okay, $40 call. So this is the $40 call still. Um, so with this call, it looks like what Fitz said, it still has upside. Um, so it's trading above the 5 EMA. Across on the moving averages, like everything typically would run the same as if it was a stock price, right? This is little things that are different that you're not going to get. I bought a contract at $1.10, so it's at $1.25 now, which is good. I wanted to retest the previous high. Essentially, the previous high when this contract was back in January, at 285. From $1.10 to like 250, I wouldn't mind that. So if it can do that in the next 2 days, that'll be even better, because it does have some mood swings. And I feel like since Fitz bought BGF, right? Or BGS.
BGS, yeah.
BGS, that these food companies are still showing that they have some relative strength in the market.
Yeah, it didn't go down when the market was going. It was going up. It stays steady, and when the market start to recover, it start to go up. By
So
the way,
I remember from earnings, we saw there was because we didn't go like Kirkland was another one that I bought that I did well with, but
yeah,
earnings has, what was, I thought I saw, oh, that's right, Tattoo Chef and Campbell's Soup, right? So since food has been doing pretty well, I see Del Taco as well. Del Taco. Um, let's look at that as a genuine trend, of how the food industry. I think those are consumer defensive.
mm,
I think there's consumer defensive, that them as a whole will probably move the market up higher, because there is a switch in the market. There has been some rotation that's happened.
yeah. Every day rotating out of back to value from the tech
Right.
from the high flyers.
No, I agree. So Tattoo Chef. I remember I was asked about this before, and I don't think we went into it in detail at the very beginning. Um, but I remember this being a good stock because it's a low float. There's a previous SPAC, so some SPACs have been failing recently. So I'm not sure how we should feel about it, but this is a low float. It's a low float. They're doing the plant-based stuff. We just
Maybe you
got to
need
see
to
what the
send a
earnings
message. Maybe you need to send a message to those guys on Reddit. Hey
are.
guys, what you think about tattoos?
Tattoo Chef.
Yeah,
Like,
check this out.
I don't know if you've seen their website, because they have a good website and all of that too.
Yeah,
So I
yeah,
don't know.
yeah. That's hey guys, what you think about Tattoo Chef? Uh, Ready for the ride?
Right. So let's look at Tattoo Chef since they got earnings coming out.
Mhm.
I I know like I said, I know it's holding support. It's bouncing off the 200 SMA.
Mm,
Um, it's holding, right? And that's the one thing here at this 18, I'd say about 19.20, maybe $19. This is, psychological barrier, right? $19, 1919, I don't know, 1920, something like that. Um, it's holding some support.
mm.
Essentially, that's where I'm getting at. Holding some support. See, I was in this stock before, as you can tell. So like I still have the lines up. Let me just move some of these. Um, let's see. So with the Tattoo Chef, see that we have some support right around here, around 19. It's holding that. It's holding it. But it looks like it wants to go down. So that's the only thing. So on Wednesday in the after hours, would love to see what it wants to do as far as like the numbers are concerned. But we're seeing that, I guess I'm starting to see like there's a genuine trend there, Fitz, that some of these food companies are doing pretty well.
Yeah, yeah.
You know,
Well, people have to eat.
people have to,
They have to eat. So doesn't matter what's happening. More money coming out. What do you expect? We're gonna start buying more food.
right? Only thing I could say with this is that it's below the 200 SMA on the on the hourly chart. Because it's below the 200 SMA, there's always that chance that it can get rejected by that 200 SMA price. And that goes for anything like, even though like I think what was it, Pfizer that was below the hour chart. Um, there are factors that go into play with that. Yeah, it might be trading below the 200 SMA price now, but they need something like earnings to help boost it up over the 200 SMA and go higher. So once it goes higher, then we know it's all in bullish sentiment there, like bullish
Man,
pricing, you know?
I wanted to look at BGSF and Finviz. The BGSF. Look at that and tell me what you think. On Finviz.
Yeah,
Look at
I'm
the
looking right
float.
now. BGFS.
Yeah. SSF.
What's that?
SS.
I did mention that, didn't
If it breaks through right there, it's gone. Look at the float size.
I? Oh, 10 million. Like that, it's that volume though.
Yeah, but it
Ah,
doesn't matter. When it comes to
ah,
low float, it doesn't matter.
that volume's so low.
Yeah, it doesn't matter.
What did they do again?
Look at the chart too. Look at the chart. So it's just about to break through right there.
Oh, they're in real estate. Real estate professional, light industry, the real estate segment for our provides office and maintenance. Commercial buildings, 56 branches, 29 states. That sounds good and expansive. Uh, oh.
As look at the fourth time it almost reached that spot right there.
And it has insider buying. Wow. At $10. What price was it at? Oh man.
14.
Oh man.
And I put it on my watch list.
Yeah, that looks
Yeah,
like.
sometime you wow. Everybody buying safe, and those are the right person who are buying too. The CFO and so on, and direct
What was it?
president and CS buying a whole lot since last year.
Yeah, they've been buying it up.
Yeah.
Like it's crazy because when you said first you said BGF, right?
BGS, yeah.
And then I was like, oh, okay. And I was like, oh yeah, this looks kind of good too. but no, not even thinking that. Wow. So that was a nice stumble upon find.
Yeah.
So even though I
So what do
don't
you
like
think
its volume, I
the,
do like its
what
chart.
when it's low float, you don't have to worry about the volume. That is good enough for when it's ready to move. But you know, when it's low float, the volume can be small, and by tomorrow, 10 million.
That's true too. That's true too.
Yeah.
I don't know. Well, at least with this one, I trust the chart. I trust everything behind it. So like I am I am
Look at
more
look at the
accepting of this one.
resistance.
I'm more, yeah, I have more tolerance for this one than typical. Because
Yeah.
that's one rule I know can hurt. If there's no volume behind there, it can, it can be manipulated easily. Uh, yeah, so like because like I haven't been in it, but I've seen that happen. I'm just like, ooh, I like, I don't know. So I just like that volume behind it. It's nothing wrong.
Yeah.
But yeah,
So
the chart looks
so you can
great.
put it on your watch list that when the volume starts to rise.
Oh, it's on there. It's on there. I just didn't get a chance to highlight these stocks yet.
Yeah, the volume rise, then you know you're on it.
So we did Tattoo Chef. There was a couple more that we can get through. I believe. What was it? Kirkland. Kirkland. I was in Kirkland. They're coming out with earnings. I was in Kirkland this week. Did pretty damn well. Because what? It made a new high and I pulled out.
Mhm.
Let me find that contract. Let me see. Where are you? Where are you? Where are you? Where did I put you? Where did I put the contract? Oh, I gotta find this contract. Sheesh. I could have swore I saved this contract. Where are you? Is it gonna show me? Let me see. Maybe it'll show me the contract. I think about it was a 25 that I had. I've been trying to keep track of all the contracts, and it feels like it's so difficult sometimes.
Mhm.
Like, heck, I've been writing it down. I don't know what happened with. Did I buy the $20 one? Let me try.
You know, you found out that oil jump up to $71 per barrel.
That oil did?
Yeah, oil is up
Yeah,
$71 now.
yeah. I bought some oil stocks actually.
Yeah,
The contracts. I did buy some oil contracts.
yeah. Saudi Arabia came under attack. Some of the oil terminals, so it caused the oil price to go up from drone and rocket.
It's crazy. Uh, I don't remember this. I don't remember this contract for Kirkland, but we're gonna go into oil too. I just want to go through all this food, the food suppliers. After this is Campbell. Like Kirkland, they do like a lot of pretty much like whole wheat, whole grain, real natural foods.
You
Uh,
remember a few months ago it was $1.
yeah, it was really like we're back in like August, well, not August, April, September,
During the corona, when the
October.
corona came in after about 2 months after, it was like $1.
Yeah.
And these analysts, because they know they wanted to buy it up, they came and said it didn't value more than $1.15.
For which one?
Kirkland,
Oh yeah, for the yeah.
for Kirk, KIRK, is it that?
Yes, this is it.
Yeah. They said it didn't value more than $1.15. That's why I didn't buy it.
Yeah, it's the strong green
And then
candlestick.
they just buy it up and look where it reached, almost $30 or more.
Mm-hmm. And it's consolidating too. And
Mhm.
this $20 area and $30 area is going to consolidate there, but it still looks like it has some downside with this red candlestick. Like it could break down. So if the analysts do like in the MACD is coming down, the RSI is coming down. It's
I'm not
consolidating
talking about
down.
no, I'm not talking about no. That's what they said when it was a dollar during the when the corona just came in.
Right.
It was like a dollar. Trade is a trade between a dollar and a dollar 50, dollar 40, something like that. And they said it didn't value more than a dollar 15.
Yeah.
Like that. And then look at it now.
That was back here. Yeah. So like back here, and this goes back to that Wychoff method again. Like I say, you will see it over and over again. I mean, highlight. Oh, still not really able to zoom in real good, but you would see it. Like it got rejected by the 200 during earnings, and this is probably what Fitz is referring to, where they were talking trash about it not worth
Mm-hmm.
more than a dollar. It was at 87 cents at that
So
time.
you don't listen to them because I mean,
Like the analysts will say what the analysts want to say, but
yeah, they're working for the companies
right.
and they want to get the shares.
So here it came out with earnings again, but look at the candlestick. It's a bullish engulfing candlestick pattern,
Mm-hmm.
right? I still wouldn't have bought over here just because it was overbought. But once the moving averages start crossing over the 200 SMA, it makes it easier. It makes it easy to recognize. Oh yes, and I said that Disney is a good buy as well. So thank you for bringing that up, Keisha. Um, Disney, things are reopening. There is a vaccine, so we have this going on. Um, we do know that Disney did make a new high. That's the the very first thing that I'm looking at. I also see that it's crossing down on the MACD, right? And we also see that the RSI, even though it's holding above the midline of 50, it's still turning up. It has some type of upside. It's holding this 50 line, which is the midway point of either being overbought or oversold. And the TTM squeeze is showing that there is some genuine weakness on the daily. It's showing that. And then also, the implied volatility is coming down, which is good. If you wanted to get an options price, option stock price, you would be able to get a cheaper one now. But I think it still has at least look like it has some downside. But on the hour chart, let's peel this out a bit. On the hour chart, so that it came back um, from being overbought, right? Went overbought, and then even when it wasn't overbought, it still made a new high, pulled back to the 200 SMA price. So it was oversold. The oversold price was the 200 SMA price. It came up to retest, kinda the previous high, quite couldn't at 195, 196. I think it did the same back here, 195. Yeah, right around 195, 196. So that's what it did on Friday, just at 195, 196. So we have 1, 2, 3, 4, 5. Let's go back, see if any of those prices were tested. I think that was the only time, right? Yeah. So yeah. Um, yep. So at least 5 times it tested that price. So now that it's trading above the 200 SMA price, and I know that they came out with positive earnings because not only did it spiked up, and then it pulled back to the 200 SMA. It's showing that it's bullish already, that it's maintaining this bullish sentiment because of the positive earnings, because the parks are going to reopen, because the vaccines are readily available, because there are certain states are going to reopen. That's the only thing. We just don't know how that's going to, like Texas, and I think Arizona, and the path to Arizona into California is roughly 6 hours, so people can just drive to Disney World over there, um, get in past the coronavirus around. So I don't know, but it does show that you know if it holds. I'm looking at the hour chart again. Let me go back to the hour chart. Hour chart shows some strength. If it can hold up this 190 price, I think that this will be a good time to buy. because it's not overbought on the hour. So when the market reopens, hopefully it doesn't break this 196 price, right? You see that it tried in the after hours here, and then in the after hours it still shows some weakness that it couldn't. So what I believe that will happen is that it will come back to this EMA price of 193, $193 and 23 cents. It will come to test it because that's what it does, right? Once it finds resistance, it wants to test that price. So it kind of tried to on the last hour of Friday to retest that price. So at some point or another, it's going to retest that price first, um, and then to get this 20 simple moving average price above the 200 simple moving average price, you would need some type of pullback for that to happen, right? So it can kind of level out. Because if it does it too sharp, that means that this price will not only pull back to the 200 simple moving average, but it also can pull back to the 20 simple moving average. So you want it to like pull up, but not too much. You want it to pull back just a little bit so these moving averages can converge together. The closer they come together, the better that they can have a chance to spike, right? Or at least bounce off of a spike like it did back here, right? It came to the moving average price, but once they all converge, it bounced off of it and said, okay, well, we're going higher anyway, right? So maybe it does this in the pre-market. Maybe we get volatile news in the pre-market that says, oh, someone from Russia does something, someone from China says something to Taiwan, some, Bloomberg news. They'll tell us stuff like around 1 in the morning about what's going on in the eastern part of the world, and they're telling us now actually. So like once you see that, okay, well, things are kind of like maybe unsteady and balanced, we don't know. So Disney might pull back. If I were to look for a position to get in at, I would definitely look around this 190 call price. 190, because now I'm in the money. So I say, okay, well, what does the 190 call price look like for Disney, right? And as Disney pops up, um, maybe I would buy March because it's 14 days out. Um, maybe I win. Maybe I'll go to April because it's a little bit longer out. But the way I would probably assess that is by looking at what the delta, what all the Greeks say, and what the volume says. So now let's look at what the Greeks say for March. We got 50 for one out of the money at 195 strike price, right? The call. And I said about 190, right? That's two in the money, about $5 a call. That's not bad for, especially with the spread being about 20 cents. That's not bad, but you can definitely get cheaper, right? And the $2.95 dollar, like that's not a bad price either, right? That's not horrible. So we will have to look at that. Let's see what the April one looks like, and then we can compare. I will not buy weeklies, just because of. Let's look at the theta. Sorry, let's. I don't want to impose my thoughts. Look at the theta. The theta is at 11 here, negative 11. The theta on for the monthly in March is around 11. Well, actually 12, 10, 12. So right around. So it's roughly the same. See what it looks like in April. The theta is 8. So that's a much better contract already off top when it comes to the theta, but the price a little bit wider, or a little bit larger, I should say, on the monthly, $6, right? So you have to weigh that in, like, oh, should I even get that? Maybe the weekly is better for for Disney, right? Maybe you get a contract. Well, yeah, because this is 9 here, but the price is still 579. So, but in April, the contracts are a little bit more pricier, where you can still get, I guess, roughly, well, about $1 cheaper if you were to if you, that's the weekly. Sorry, this is the weekly. That's the weekly in March. Go to the monthly in March. Monthly in March, you could still get roughly about $2 cheaper than buying in April and still be relatively in the money or close to being in the money. Well, this is 195, so I can't say they will get to 195 tomorrow, but they did that in the pre-market already, so it was already up. It's at 194. So maybe you can get a 195 call. Let's look at the volume, liquidity, what it look like. We have an open interest of 7,000, which is good. That means that there are available contracts, right? The volume is 1,000. It's not a whole lot, right? But if you look at it in comparison to the other contracts, right? You see that the $200 call, I just two out the money. Maybe we look at the delta for that one.
The volume is greater than the open interest.
Yeah, the volume is greater than the, well, the open interest is greater than the volume in that one. So, and this has a lower delta, which it could possibly get the $200 strike price in 2 weeks. I don't see why it couldn't. Like, you can, this contract could expire in the money. It could, but still, I would feel safer buying this contract at 195, 195 strike price. Maybe buy 2 or 3 contracts that will come up to roughly about $600 to $900 a contract that you're betting that the stock will go up to, or at least expire in the money at 195. So you'll get this contract. You probably want to see what the chart looks like. I'm sending it to my chart. Hopefully it'll pop up so you can see it. Yep, Disney. There you go. Let's share that. So this is the Disney contract. We see it's kind of doing, well, no, that's not it. Well, it is the contract, but not what I was about to say. On the contract itself, excuse me, it's trading close to the 200 SMA. Once again, this is something similar that we saw on the Disney share price. If I can get to it, there we go. It was actually above. It was above. So let me share that so you can see that. So you see that on the share price, it's actually above the 200 SMA price, right? So the share price can drive this higher, but the option price shows that it's below the 200 SMA. So, we know that the option can have some influence on the stock. And that's just because of just how the underlying works. But at the same time, it's coming off its bottom. So even if you were to buy an option here, and let's say that you buy it at the bottom, like let's say that it tries to trade sideways, and then you buy an option contract at around 260 a contract, maybe even, yeah, 260, roughly 270, because you still want this to hold. You still want the bottom to hold, right? This is 215 as real support. So if you say, okay, I buy this at 260, so that's 35 cents downside risk. Maybe about 270, it's about 45-cent downside risk. But you want this 270 to essentially touch the 200 SMA price. If we can get to the 200 SMA price, which is $1.50 above, right? You're risking, what was it, 45 cents on the downside for $1.70 on the upside. That risk reward doesn't seem too bad, right? So even if it gets rejected, you're like, well, it got rejected. I could, at least I could still take $1 in profits. So if you bought 2 or 3 contracts, you know, you still have $1 in profits. You could have made like, what was it, $600 right there. Off of, well, actually, we have 3 contracts, about $1.50. That's about $4.50 in a matter of like hours, 2 hours, right? Um, but we can see that this has the potential, because the share price is trading above the 200 SMA, that it has the potential of going higher. And that's what we want to lead with, at least that we feel that it can be influenced by by the share price more than the option price. You're very welcome. So this is a good look. Um, I wanted it after like the earnings came out. This is something that I've been wanting to have actually pre-pandemic. Like last year, I was walking around Uniqlo because that's what I was doing before the pandemic. I was walking around and seeing what people were buying, and I was like, "Oh, okay." And in Uniqlo, they were just advertising everything Disney, and the share price was at $100 at the time. I think 104, and I was doing my analyst like, hey, I was finishing up my MBA, and I said, oh, okay, this is pretty good right here, and these are the reason why I would probably buy it, because people are is being advertised in stores. Like you couldn't turn around without seeing a Mickey Mouse shirt, or you know, something that was related to Disney in Uniqlo. Like they had everything. It was just like a sign. And then the pandemic happened and everything pulled back.
Mhm.
So but I knew then that at $100 it was going to do well, and then with Hulu being behind them, now we can just, you know, not even think about Magic Kingdom and all that stuff. Even though China has had their Disney World open throughout this whole time, like we take the theme parks out of it, they have WWE, like they have what was some of the other stuff that they were working with? Obviously the Peacock and stuff like that. They have uh, you know, the Marvel, like they had all that going on. So you know, Hulu was a big deal for them when they first came out. So there's so many driving forces behind Disney buying the one now 95 call, because it was up in the after hours. You know, I would prefer 190 because I want that pullback. But if it holds above that price, I think you're good to go, and it's going to see $200 and beyond. Like this week might be the last week it stays below $200. Might be. Um, so this might be one to definitely look at. Um,
You, you want to look at this one?
what's that?
Hmm?
What's that?
MDLX.
MVL
LZ. Sorry.
M
Mondelez.
Mondelez. How did Mondelez go? MD.
DLZ. MDLZ.
Gotcha. That's right. That's right. Ooh, this is a nice one too.
Just crossing the 200, right?
You
Just
just
about
crossed
to
the
cross it.
200.
Just about to cross the 200.
So this is the one thing that I usually get curious about when it comes to stocks that make their all-time high and they trade below the 200 SMA. My, but when they do it for such a short period of time, I always try to wonder how long they're going to trade with the 200 SMA. Um, that's just one little nuance that I try to figure out. This stock, anytime that it's come back to the 200 SMA, it really stays there for like not even that long, right? It was there for 2 days, and then it had earnings, and it had a reason to stay up. This time they had earnings after releasing, you know, after making a new high, and pulled back a bit, and that's why they're below the 200 SMA.
Just about to cross now.
What did they get? Oh, they meet. Oh, okay, so they meet what the street said. They were going to get 67 cents a share, and that's what they did.
They took profit after, I guess. And it closed with a lot of volume
Yeah,
the last 2 days.
yeah, these food companies. So this is what I was referring to with it being overbought on the RSI and needing to pull back, because in the pre-market, it could potentially try to ramp up a little bit, but actually nah, because looking at its previous times, well, the previous times it wasn't over the 200 because it went overbought here. It was below the 200, got rejected. Overbought here, but it was over the 200, got rejected, pulled back, and went under. Oh, this chart is so ugly. But the thing about it is that once it traded below the 200 SMA, it was there for a couple of hours or several hours, right? This is the hour chart. Um, it stayed there for some time. That seemed like about a 2 week time period. Yeah, about roughly 2 weeks. Went higher after earnings, went higher, pulled back. This one's so choppy. I feel like anything around the 200 SMA is you're doing pretty well. So if, as long as it's above 54, 60, 61, you're pretty good. That's when it's overbought before going into the next trading day. I think that it's going to pull back. So it'll have that opportunity to pull back, as opposed to just trading sideways and waiting to go overbought, which is what I typically like. I like it when it's waiting to be overbought and then the market opens and then it goes overbought, like UNFI. Um, but this could pull back, hold this 54. As long as it's above this 54, it doesn't trade below it. Um, then it can maintain its bullish sentiment above the 200 SMA. But it's going to pull back, and 54 looks like that target price that it needs to be above. This is how choppy it is. I realize that not all food companies are treated the same way, right? Well, not all stocks are treated the same way. Even though this looks as ugly as it does, the upside potential is there. It just needs to pass that 200 SMA price,
It
which it
looked good
hasn't.
on the daily.
I'm on the daily now. It has it.
Yeah, you
Strong
see
green
that?
candlestick.
Right.
Strong green candlestick. Strong
Yeah.
volume on the previous 2 days.
Yeah.
Trading above on the RSI. Like it has everything. It has
Everything. The
everything behind
moment,
it.
momentum just crossed the zero line, the just crossed. And what I'm seeing, it have a lot of run to go. Go right up to 160. I mean $60.
Yeah, it's definitely going to test the five upside on $5.
Mm.
It's just the choppiness that it's going to take to get there. It has so much choppiness in between. Like Green Day, Red Day, Green Day, Red Day, Green Day, Red Day, Green Day,
Yeah.
Green Day, Red Day, Red Day, Green Day. It wants to go. There's a lot of what is this? Let's look behind the numbers.
One of the things that we want the others to know is that it doesn't matter how the stock look and you analyze it. If the market go down, they might still go down. That's how it is.
True.
On a regular day, the analysis is good and then the stock will go up. But if there's a situation where the yield is still a problem, then the market, because right now it's fluctuating, it's down over $1. It's down to 382 instead of before it was like 385. So it's down to 382 now. So it's fluctuating up and down. 382.28 right now. And it closed at 384 Friday and something. So it doesn't matter. These stocks look real good, but if it's a bad day, it's a possibility they might go down until when the market recover, then they continue to go up. So
No, you're absolutely right about that one.
yeah, because sometimes we analyze them good and they look good, but if it wasn't for a bad day, then they will go straight up because the chart is never wrong. The chart is, it doesn't matter what analysts or whosoever say, what you see on the chart is a real deal.
Don't remember. No, and the chart is the real deal.
Yeah.
Always, like, I laugh at when we laugh at it. We laugh at like, oh, this is what the analysts are saying. We're like, yeah, they got bought off. Like,
The chart is always the real deal. It's what's happening right now.
Yeah. We did mention oil. I do want to show what I bought as far as the oil stock was Northern Oil, oil and gas. I bought a couple of contracts in this one.
What's the ticker?
NOG.
Oh, okay, NOG. I used to that one.
NOG.
Well, tomorrow gonna be a good day for you.
I anticipate.
Yeah, that's gonna be a good day for you, man.
I anticipate it's not overbought yet, so, and there's a lot of strength here. So
yeah, oil is 71, fluctuating between 70 and $71 right now. So you can look at it up there. You can look at it right up the top there.
yeah, it has some upside.
Yeah.
It has some upside. So
Oil futures.
So that's one for oil. This is when I want to get ready to sell, I should say. But it should break out. Like to the point where I don't even think I need to sell immediately because it's going to trade above the 5 EMA. It might have some pullback, like, because that's what they do. But I think even the pullback is going to hold above the 5 EMA. Same with BGI. This is actually, I try to look for diversification.
That's a cheap little stock there. That look real good. I was looking at it last night. It looked excellent on the chart.
I've been holding this since $3. I think it was $3. It was somewhere I got in on this day. Then I bought in the after hours, and I was like, "Oh, okay, I should hold this." So, I just been holding it since then. And this is that strong green candlestick. It's trading above the 5 EMA.
Yeah.
So
looked real good. Yeah.
This is something that you should look for. Like when I talk about rules, trading above the 5 EMA is important.
You know this. I see this little one here, LLIT. I think some institution is involved, but they're just buying it slowly. The resistance is 17, but it came down to way down. It was like it's 8.15 now, but it went up at $1.28 Friday. But I think some institution it's buying. It's just barely got. They're not buying up the shares a whole lot. They just take the little time buying it, and they're crawling all the way up. LLIT.
Yep, I have the chart up. It is holding that $7 area pretty nicely. It's in the medical devices. Ooh, a nice low float, 1.7 million.
Yeah.
Let me share this just in case. Nice little float there. That's pretty damn good.
Yeah, just send it over to Reddit.
Go ahead.
Send it over to Reddit.
Send it to Reddit, yo. Like,
yeah.
Come on now. Come on. Let's buy this. Let's to the moon.
Yeah, to the moon. Yeah, let's put what's the symbol they use? The ice cream cone.
That's what it was, right? Yeah. Which is crazy. They were trying to figure it out on CNBC. Shit, I was trying to figure out like what does that mean? Like y'all tell me. Like I have no idea. And it's crazy because as I look over here on FinViz, someone said looking for a $20 plus on merger run up. So I'm like, what merger run up?
You mean the LLIT?
Yeah.
Yeah, that's a little gem there. I watch it Friday all the way, take it little time, and I feel like some money pumping in there, but they they don't want to catch nobody to pay much attention to it, so they take the little time buying it going up.
Yeah, I want to look at his SEC filings and see if anyone's put in anything on there. What are we saying? Top gainers. What are y'all saying? The same happened to me with LLIT. Not sure why I bought it or what it is. Trying to figure out what happened makes my eyes go crossed. I got my eye on XPL, waiting for it to run up. Small position at LLIT, waiting on merger news. Then sitting back.
Yeah,
So someone
yeah, that's one of the things that I thought I saw.
advantage and sold. Yeah, I know it's a medical device company that I saw.
That is always good.
Yeah,
Those stock normally do very well.
yeah. So this will be one to definitely keep the eyes on. Let's see what the SEC filing says, if anything. Alexa, connect Bluetooth device. Hmm. See, let's see here. LIT. So we're here at Edgar. Edgar likes to tell us stuff. Edgar likes to let us know.
One of the things that we need to pay attention to